Okay. Are we Gucci or no? Or no? Should be Gucci, yeah? Should be Gucci with a new microphone. Okay. Are we Gucci or no? Or no? Seems fine, yeah? Seems fine. Well, I'm curious how the typing and whatnot will be sounding like. So a bit, my desk setup is a little bit wonky right now, but that's okay. I don't know how long this stream's gonna be, to be honest. I'm so tired, it's crazy. Crazy. We got the link, Also, we got some clips, right? We got some clips to start this thing off with. Just pause the music for a second. Switch this. All right, what's the last thing we talked about?
It's here, right? If we reject this, if we do end up kind of just like ranging over the weekend, probably just gonna come like ding, and then like that kind of crap, the usual weekend spiel.
Agree or disagree? Agree
It's here.
or disagree, right?
Okay, this low level might get actually go for the weekend. Like the Golden Pocket region down there. That's not that far, and there's like a big ass cluster of like high leverage liquidations right there.
Agree or disagree?
Right, Pocket, basically. Okay, this low level.
Agree or disagree? Put this back. Put this back on. Looks like it played out just like that. Oh, that did leave the line. But yeah. Agree or disagree? Also, right, last week we were having a discussion about the Golden Pocket, right? But the fibs. I mean, first of all, show to the yellow lines, right? Show to the yellow lines, ding. Show to the failed auction of this yellow line, ding. Shout out to the single prints. Ding, ding. Can we get a shout out to the 618 bounces? is it math? There's enough fucking math. Ding, ding. You literally would have top ticked the long or bottom ticked the long and top ticked the short. Big so fucking perfect. So shout out to the fucking math. Anyways, let's get back on our shit. We'll delete this, we'll delete this. Which of these fibs should we keep? We'll get rid of both, actually. Fuck it. Get rid of that, get rid of that. Lock of that thingity thing in place. How are the rest of the futures doing? Shout out to the 886, right? Shout out to the 786. What? What? How are they bouncing off these imaginary mathematical lines? How? How? This shit's fake. Show me the data. Show me the data, they said. Show me the fucking data. Oh, that felt so good. Oh. In terms of the trades, haven't changed anything though, right? I mean, until we get above that line for the shorts, I'm not touching it. And same with this lower stuff for the longs. So kind of leave that doing its thing. Boom, boom. Also, probably make sure this thing sounds right. Right? Let's give it a check in terms of. We'll pause this for a second. Then we'll come here and unmute this. We'll pause this for a second. We'll come here. Can we get a shout out to the 618 bounces? Is it math or is it not fucking math? Okay, seems fine. I'm just curious if it picks up any kind of background noise because it seems like just picking up something. Maybe lower this a smidge. Okay, we'll play with it. After today, we'll kind of watch it back and see if it sounds weird after it's done processing. Because there's like some gain knob on this thing that essentially you can change how easily or not easily it picks up noise. Seems like it's picking up some kind of background noise, so I can't tell from listening back if it's actually getting it or not. We'll determine it later. We have a new interview to watch, so we're definitely able to do that while we nerd out. Also curious how it sounds like from back here, actually, funnily enough. We'll test it right now. Blah, 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 blah. Test it right now. Blah, 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 blah. Okay, I mean, it's picking it up, so I can also move it, I guess. I did get the arm as well. I have like a boom for it right now. In the meantime, we shall start watching this thing, get our notes. Actually, let's update our levels first before anything. New daily levels, new weekly levels. Previous week, value area high, 88738. 90427. 0.7. Oh yeah, the music. Whoops. Whoops. Nine 90075.2. Eight 9718. Yeah, I went on a long ass hike this morning. Very long. 88287. Very long hike. I also woke up hella early for it. So I'm tired. And I went to the gym, had a crazy ass back workout, and then I also like did like an hour kind of like incline walking on the treadmill. I'm at like 30,000 something steps for the day. I'm tired. Wow. This boy's tired. Also, I need to update these this command in the chat. I think like tools. I think. What do we make it? Oh no, it's fine. Okay, cool. Cool. Thought we were missing some things, but no, we are Gucci. Okay, cool. Also, funnily enough, my exo charts ran out yesterday, and I went to renew it, and I checked the email that I used to make it because I used like some like burner email to buy it. These people have been double charging me for the past 6 months. I didn't even realize. Didn't fucking realize. So sent them a message. Hopefully they give us a refund. FOMC. You know what else I was wondering actually? Given this whole leverage trading thing, like how does like a place like Breakout, that prop firm, like how do they function in Canada, or do they not function in Canada perhaps? Or is there some like loophole where like prop firms can offer those kind of things? Yeah, that's true actually. I just realized that. How does that even work? Because in that case, you might as well make like some accounts on there, right? Like FTMO and whatnot. Or was that shots? Also, I have to look into the tax laws for this stuff. Because I think there are some certain tax benefits, or maybe like not. Maybe it's like a tax negative to use prop firms in that regard. Oh yeah, it is some like regulatory gray hole that they do this. Interesting. Anyways. Anyways. I have to get used to muting and unmuting this thing. Boom, boom, boom. Especially when I turn on my speakers. Else I'm gonna blow up my whole house. Boom, 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 boom. Thoughts on this week? I don't know. It's FOMC week. It doesn't matter what I think. Doesn't matter what I think. Doesn't matter what you think. Doesn't, you know, it's just irrelevant. Our job is not to predict what's happening. Just to have a plan for levels to the upside, have a plan for levels to the downside, and then react accordingly if it gets there. Probably the best way to go about things. That BTC up and down was extreme. Was it? We talked about this exact scenario. No, if you were a believer of the fib, right, you would have been in both these trades. Pixel perfect, mind you. Right? Right or not right? Let's just look at it. Let's look at where this thing bounced down to the pixel. Right, the 618. And let's look at where it bounced it down to the pixel down up here. Interesting that is, yeah? Agree or disagree? Shout out to the math. Shout out to the math. What is the link for this interview?
Strategies that have
Disagree? It's okay, I'll make you a believer over time. Slowly but surely, turn them into math believers. Also, I'm using a different mic, so I can't tell if there's like some weird background noise or not, but if there is, let me know and we'll try and play with this a little bit. Like lower the gain or something. We technically have a small CME gap to the downside. Yeah, we do. We have a little baby gap down here. I mean, I don't even know if I could, like, if you're using the Wix, this thing is like, what? It's $25, I suppose, and look at it at a gap. You could input random percentages or do the same thing. Okay, well, we'll see, right? Just keep in mind, keep these samples I show you in mind. The first two shorts, the first short we talked about in the juice box and the first long, both down to the pixel, right? Even this bounce. That's three pixel perfect 618s in one weekend that you could have taken. Bum, bum, bum. That pixel perfect juice. Okay, well, we have to watch this interview. The mic does seem to pick up a little more background noise than usual. You have to play with it. There's like a knob on this thing that you can tweak the gain on it. But I'm not sure. Here, actually, let's try right now. Because the thing is, there shouldn't be much background noise unless like a car is like speeding by outside. Usually should be okay. Okay, what about this? I guess it depends what you mean by background noise. Are you talking about me typing? Or like just random, like my PC humming in the corner kind of thing? Oh, yeah. Yeah. I'm sure you can hear my fingers cracking a lot more whenever I crack my knuckles and whatnot. We'll play with it, because apparently there's like a... I'm using like the default settings for this thing. But apparently, like, I'm not sure if you guys are familiar with like the NVIDIA noise canceling stuff. Where it uses like AI to cancel, essentially, if it's not your voice, it tries to like use AI to like cancel out that sound wave. I haven't set it up yet, but that is an option. We'll play with it. If not, we'll just go back to the old microphone, yeah. The AI softwares are actually really good. Yeah, it seems like it. It seems like I've never used it before, but let's just throw on this guy. We'll put it on this chart. As we prepare for FOMC. Okay, cool.
pretty poor risk reward, and I've always been on the opposite side of that, where I would rather sacrifice win rate to have amazing risk reward. A lot of times that happens when I pyramid positions. I might have a position that I could close for a small profit, but I'll add to a winner. I make 10 times as much because I aggressively added to a winner.
Introducing David Hanlon, better known as Laptop Legend, a trader who lost nearly $1 million in an hour, and he didn't just survive. He rebuilt his entire strategies to become one of the most disciplined short sellers in the game. In this episode, David reveals how he turned $10,000 to $1 million in a single trade, as well as his exact 3-step process to spot the top of the move with scary accuracy.
Normally, I like breakouts, but they do inherently have a much lower win rate than a mean reversion type strategy if you know how to time it correctly.
Explore that with me. I would just assume a breakout with the trend would be more favorable, and a trying to pick the top seems more dangerous.
When you get in a breakout, the idea is you want to have pyramiding is basically the idea of when the trade is going your way, at a certain point, it develops a structure where you can realistically change your risk and move it to a tighter position. You can then add to your position and get up to the same dollar risk level that you had originally. And so if you have multiple opportunities where you can move your stop up and get a tighter stop and then increase your size, you can get to the point where you might have had a 10K initial risk on a trade, but you just get so big that that 10K initial risk turns into $1 million.
If you break even a trade, and
True.
you move your stops to break even,
I do
you didn't
something
trust your
similar.
analysis. You haven't done the work correctly. Just overall managing a position, it should be a more set and forget thing of like, if you made a decision to get in, you got to see it through. What would you say to that kind of belief?
I can understand that argument because
I want to take a technical deep dive today and really explore what it took to get here, the specifics. But I want to start off with, when you see trading, do you explore it as an art or a science?
I think it's a little bit of both.
That's what I was gonna say.
There's definitely scientific aspects to it where you have to be very analytical and go through the past and maybe study what happened and come up with a thesis and go through all the charts and figure out exactly what it is to prove your strategy. But at the end of the day, the way that I do it is kind of an art, because I'm not one of those extremely systematic people who can say if a stock goes up 10% for 3 days straight and then does X and X, then I'll bet this much and cover it. Like, that's not what I do. So what I do is I look at the past and I take that information and use it to basically make a thesis of what I expect to happen. And so that's like intuition from the scientific side of studying it. So
I used to I had this conversation with many traders, and it used to be more in the science categories. The conclusion I came to: you make the scientific process to build your edge, and then you follow the data. It's always about data. And then this trip on this US tour, I've spoken to quant traders who are completely systematic and use their algos, and then a lot of professional traders. And I realized a lot of these guys are intuition and market experience and decades under their belt, and how they deploy it gets super interesting. So
Also, I started reading a pretty interesting book actually. We'll just throw it on screen. What was it? Strategies for futures trading by Carver. Oh yeah. Whoops. If anyone wants to read it along with your boy. This thing. Not that far into it yet, but pretty interesting. Oh, I just closed the fucking... God damn it. I'm so stupid. God, I'm so dumb.
So I want to navigate this of like as you've had years under your belt, how that explores in terms of how you deploy your edge. But before we get there, can we set?
that's not what I do. So what I do is I just
Used to I had this conversation with many to build your edge, and then you follow the data. It's always about data. And then this trip on this US tour, I've spoken to quant traders who are completely systematic and use algos, and then a lot of professional traders, and I realized a lot of these guys are intuition and market experience and decades under their belt, and how they deploy it to get super interesting. So I want to navigate this of like as you've had years under your belt, how that explores in terms of how you deploy your edge. But before we get there, can we set some foundations on what are your key performance indicators, KPIs, in terms of trade frequency, win rate you aim for, profit factor, risk to reward, and average trade, average hold time, just so we can kind of get a framework for the conversation?
Sure. I don't have all of those data things specifically. I mean, I guess I could try to go look them up. I know my win rate right now is about like 41%-ish over the course of my career. Risk reward, it just depends per trade. Profit factor is something that, I don't have the current numbers overall between all my trades, unfortunately. But I would say there's different types of strategies. There's super high win rate strategies that have pretty poor risk reward, and I've always been on the opposite side of that, where I would rather sacrifice win rate and have a sub 50% win rate to have amazing risk reward. And a lot of times that happens when I pyramid positions. Like I might have a position that I could close for a small profit, but I'll add to a winner, and then it ends up turning into a loser a lot of the time, and that kills my win rate. I could have a 60% win rate if I didn't do that. But the ones where it does end up going on to work, I make 10 times as much because I aggressively added to a winner. So that's kind of my philosophy.
Explore with me.
I mean, yeah. The thing is, I don't do that typically. I mean, I'm guessing he's gonna say that he does it. How do we describe this? Okay, so suppose that you enter the trade here, right? And it starts going, and then like it pulls back and starts going again. You can like start adding aggressively, right? And put your average, and then you walk up your average entry to like here. So like it, and you can even keep it. You can even put your stop here and like risk it if you want. Me, I don't do that. I'd rather have it break even. But you can do this multiple times, right? Like it bounces again, and then you add. Now your average price is here. So you're like adding risk free to the trade, like increasing your size a lot. I'm assuming that's what he means when he says that he does that, and sometimes it gets like stopped out. Because I typically don't like doing this unless I got like a really poor fill. Like I had like a fib drawn, and I only got like one thing filled in. Or I've taken profit and I want to put size back into the trade. But it seems like this guy's about to talk about how he does it, excluding these scenarios. He just does it right away when it gets the bounce, which is interesting.
This idea of pyramiding to be done effectively, and if you have any recent trades to share with us around this idea.
Yeah, so pyramiding is basically the idea of, you put on an initial position in a trade, and then the trade begins to go your way. And when the trade is going your way, at a certain point, it develops a structure where you can realistically change your risk from where it was originally and move it to a tighter position. And so when that happens, you can then add to your position and get up to the same dollar risk level that you had originally, but now you have a larger position. And then if the position continues going in your favor, you could theoretically do the same thing. And so if you have kind of a big picture trade where there's multiple opportunities where you can move your stop up and get a tighter stop and then increase your size, and then the same thing happens, you increase your size, move your stop up, you can get to the point where, you might have had a 10K initial risk on a trade, but you just get so big after adding and moving your stop up that 10K initial risk turns into $1 million. And that actually happened to me recently on this Bitcoin breakout that was like, I think in the middle of July, if I'm not mistaken, where I originally took a $10,000 risk on an options position, and I was able to pyramid that into $1 million.
It seems like a dumb method. Why do you say that? Why do you say that?
Gain after like 4 days.
Wow. Story is crazy, and when someone hears those numbers, they're like, wow, I'm going to do that right away. If we can kind of draw a line, maybe it's a blurry line, but just kind of what is the separation between euphoria, greed, chasing a trade, and getting overzealous on an idea and over conviction versus the art of doing this correctly in terms of, okay, this is scaling in, this is a de-risk the principal and then ladder in. How do you deploy that differently?
It's very difficult.
Trying it out right now on my eval. I mean, maybe don't like wing it on your eval, but logic would say the further the entry, the higher chance turning against you. I mean, I suppose that is one way of looking at it, but at the same time, like if you catch a trending move, then that becomes like a massive trade, right? which is like typically the trade to like increase your like account equity. Like let's say your account equity is like kind of climbing slowly, and then you get like one of these like home run compounding trades that are turned into runners, and you have like a huge leap in your account equity curve. Definitely not for everyone, right? It's not it's like at the end of the day, like we watch a lot of these now, right? And no one has trades exact same.
Difficult. There's a lot that goes into it, and I think a huge part of it is having put the work in before to know how the stock that you're trading moves and like what the tightest pivot points are that you can be adding on, and not just adding randomly into strength. Because if you add too much too soon into strength and then it pulls back, like you're going to ruin your average and you're going to stop out for a loss. And so I think really you have to know exactly where those pivot points are, and that's something that only comes through experience and just really knowing how these patterns play out and having a bunch of examples of them.
I usually get to kind of entries and break-even drills later on, but we can explore it since we're here. Is the philosophy here that the first trade you got in with the 10K risk in this example, it's an independent trade with this independent trade idea, entry criteria, and X, Y, Z, and then once that's...
No, I will say though, I'm surprised that he does that and then like allows himself to get stopped for a loss still. Like typically when I do it in a way such that I can get stopped at break even. It seems a bit risky, but I mean, doing it the way he does, you definitely get a lot more gains. Say that, if it works.
Into profit. Do you have a break-even protocol and then reuse that principle on the next position?
Yeah.
Okay, so it's not necessarily increasing risk. It's recycling the same risk is what we're doing here when we pyramid.
There's different ways that you can do it. Okay. As your conviction in a trade grows, you of course could choose to use more risk than you initially had, even on the first position. But typically, the best way to do it is to not do that, because obviously, the farther the trade goes in your favor, like theoretically, maybe the worse the EV is getting at that point, because it's already so far above your initial entry. So, I think it doesn't always make sense to risk.
I'm more likely to size in the opposite way. What do you mean? Seems like he's addressing what you just said, though, like your previous comment. Is he talking about it now?
A lot more on those later entries.
How would you do it? Would it be like following it with an EMA, or is it kind of market structure related?
I think both, yeah. I mean, for me personally, I prefer to use market structure and just like, for example, on the Bitcoin trade, I had a trade back in November of last year where I made like, I want to say like 300,000-ish on the breakout. But I learned a lot because in that one I did a terrible job of pyramiding overall, and I kind of fumbled that aspect of the trade, because every time that it was working and it would break to new highs, I would be like adding aggressively on those new highs with a really tight stop, and then I would just sell those ads on the first pullback. And that actually ended up costing me like I think an extra $100,000, and I never got to have that extra size. Versus if I did it the way that I did on this most recent trade, I probably could have made $1 million on that trade too. But I learned those lessons from that one, where like the way that Bitcoin likes to go a lot of times is it will have like a support level and it'll wash out under that support level, and then it will go once it flushes everybody out. And so that is specifically what I was looking for on this. Like the daily structure is still intact. It got really tight and then it broke out through, I believe it was the 112 level, but don't quote me on that. And then once it did that, then it kind of confirmed my overall thesis on the daily. So at that point, I was looking for these washes and reclaims to be adding size and risk versus the low of that wash that was under the support level. Versus before, I would buy as it's going through resistance, and a lot of times it would just clear out over resistance and then come back down into mid-range, and I would just puke it at lows because I was oversized with a bad average.
I trade a currency, so a healthy currency market is generally maybe a long.
I'll nibble on a dip, and if it dips further out of the range, I start sizing each buy, so my actually entry gets closer to the stock price. Oh yeah, like adding to a loser kind of thing. Yeah, I mean that's how I typically envision a pyramid. Like I'm surprised he uses like the term pyramiding, because it's, I don't know, visually in my head it's like the other way around. Where like you have like a pyramid, like let's say your price is coming down into you and you have like a pyramid like this, and like your first entry is like a bit smaller, and then your second entry is like bigger, and the third entry is bigger until you get to like the bottom of the pyramid, and you're like fully sized into the trade, and each one's like bringing your average price down more and more. So like the first bounce you get, like you're in the green. Yeah, I typically do something when I use the fib. That's what I'm doing a lot all the time. I have a fib drawn, and like my orders are at the fibs, getting bigger as it gets deeper.
time frame, but it's a consolidating market unless it's a very weak currency that we're trading. But in the stock market indexes, crypto, generally speaking, they're an appreciating asset. So there's a baked-in trend. When you are entering at all-time highs or extremely high periods, around 100K and beyond on Bitcoin, for example, and I remember off camera, you're kind of saying some trades are intraday, some trades can even be swing. Is this idea of like, okay, if this intraday plays works out and I've got this I've got this tide on my side, I might as well ride it into a swing trade and beyond? Or is there different models for different times of the year?
I think whenever I'm going into a swing trade, I always have the idea that it's going to be a swing trade, just because the way I structure trades are very different if not for that. Like if I'm in a day trade and I buy something and it immediately, for example, in the options, I think I was up by the end of the day on the entry. I'm pretty sure I was up like 100% on the options. If that's a day trade, I would be taking that immediately. But because I had the swing trade thesis, I ended up holding those and selling for like a 500 or 600% gain after 3 or 4 days. So it's just a very different trade plan when I come in knowing that it's going to be a swing.
Let's take a moment to talk about a partner of the show, a leading prop firm that is Funded Next. It's important for me to listen to our community to see who are you working with, for having treat out with. That is, you're meeting for a technical driver in the industry, Funded Next. Check out the link in the description or use the code TOT. Is your main technical driver, because I'm familiar with this Bitcoin play recently, are you kind of waiting for a range of consolidation, maybe call it an accumulation, and then trying to anticipate the breakout and directional bias, or was this just one trade example kind of thing?
I think that's just one of my favorite patterns in general, is just a big picture breakout where you get a really nice move and then the stock or asset, whatever it is, forms a really tight range and then perks through that range. That's just one of my favorite patterns of all time, because
Futures are so lame
especially
right now.
if you structure the trade the right way before volatility expands, you can just get some incredible risk to reward on that. And if you pick
I want to switch some of this stuff. I mean, honestly, I would not be surprised if this is like until Wednesday, right? I'd be pretty surprised if we get some like crazy move here before then. I guess we can take a little gander at some of this options stuff real quick. What day is the thing? The 10th. Interesting. Seems like people are hedging for a sell-off on FOMC, which makes sense. I guess we have rallied pretty hard off the lows. What the day after? Even lower. Wow, interesting. I mean, we'll see how this changes tomorrow, but like right now, there's like a shit ton of like options activity going on, like at 6,700. Interesting. I feel like a lot of people have chosen their team for tomorrow. I suspect most people are gonna wait till Wednesday, right? It's a bit risky to like do anything crazy right before this guy starts talking about stuff. Where did this thing go?
the intraday spot, because you know that the daily is super primed. Like I literally risked like on one of the ETFs, I risked like 10 cents on BitX. Okay. I risked like 10 cents on my entry and ended up getting like $10 a share.
I see.
So when all the time frames align, you can get some incredible risk to reward.
I'm with you. I think a lot of people steer away from consolidation because it's noise and it's choppy and this is not the mover, and then they'll get into trends because the trend is your friend. Sure, but the asymmetrical gain here is really if you can get in before the before the move, before the breakout. I want to, if you can follow me mentally here, I want to describe an inflection point and kind of hear your elaboration on it. So when you have a range, let's just call it a box, where you have equal highs and equal lows, and we just got a very static range, and then you shoot higher, you're breaking out of the range. Now you're obviously going to have the breakout traders that are going to be waiting for a pullback into the range, maybe a break test, maybe a Fibonacci, an EMA, and they're going to look to go long. And then you have the other side of it, which is the same breakout, but then this is now intended to be a sweep of the highs, grabbing the liquidity and stops or whatever, and then it pushes to the same mid-range area, but then continues lower. So you have a point in the market, this inside the range, where the price action prior is exactly the same, and then it just ends up in completely different directions. How do you differentiate, considering yourself being kind of a breakout pattern trader here, to not be on the wrong side of the market?
I prefer when it gets very tight. And I mean, I think probably, what is it, I think it's called the ascending triangle is my favorite type of pattern, where you have like a flat top and an increasing slope into there. So it's like a very, very tight compression, versus if you have, a range like this. To me, that's still fairly loose. And it's just harder to have a defined risk point, because it could break out above and like come back into the range, but it still wouldn't have broken the support. And that's not really tight enough for me.
And
so
Bitcoin was doing just that.
Interesting he picks the ascending
getting
triangle,
very, very
right?
tight. Yes, just like that.
And is there any telltale signs inside that compression that will kind of give you an idea of like it's more likely to break out in that direction, not that direction?
I mean, I tend
I guess I would have to look at more of these things in the higher time frame, because like on the lower time frame, a lot of times like those things get swept first, right? It's like a bunch of unswept lows build up, and then it does like sweep and then goes. Maybe he waits for it to happen and then gets in on them, perhaps.
to think most of the time that when you get ascending support and like a flat resistance line, I tend to think that's going to break up to the upside.
Okay.
And when you have a flat support and descending resistance, I tend to think that's going to break to the downside. And you can get the symmetrical ones, where to me it's a little bit more 50-50. Obviously they can end up breaking in whatever direction, but I love taking breakouts, and I love taking breakdowns on the short side as well when you get the flat base and the descending.
And how do you go from trade idea, for example, this technical pattern that we're describing, to go from idea to execution? What is your protocol to take this as actually I'm going to enter now today with this entry, this stop loss?
There's certain things you can look at. Depending on what the time frame is, like maybe you need to wait for the EMAs to catch up, or the SMAs to catch up, and everything to get coiled and very tight. And that's usually what I would look for on like a bigger picture trade. But yeah, I mean, I think once you've seen the structure of the market enough, like you kind of know when price is ready to go and when it's not. And that might sound like hard to replicate, but there's just like, once you've looked at price enough, like I've gotten to the point now where, for example, Ethereum right now, like it's building a nice flag, and I think at some point this could break out and go well over 5,000. But the flag didn't look ready to me yet. And so, there's a lot of people who maybe were positioning long thinking that it has to break out. But to me, it just looked like the flag needs more time to develop. And so when I see that, I'm trying to stay out of that, because the worst type of market for me, where I take the biggest losses, is a choppy market.
14
because
minutes,
I
you start getting
love
an idea
betting
what's going on.
just on like the continuation, whether that is because you get a huge parabolic move and I'm betting on continuation to the downside, or I'm expecting a breakout and I'm betting on continuation to the upside. But if I bet on something and then it pulls back and I cut and then I flip short and then it comes back up, like that's where I take the big losses. So I really like to wait for just the price action to get very tight.
So just comparing my currency trading mindset.
It's like a pretty common thing, right?
I
When he's
tried-
describing, like, what do they call this? Like the VCP, right? Volatility contraction pattern. Like Mark, what's his name? Mark Minervi popularized it. I think he has like a book on it.
Because I started investing a lot this year, so moving towards stocks and indexes, and I tried to take my price action beliefs there and kind of bring it into this domain and to see if it would assist me. And generally speaking, it didn't, which was interesting. And what I would refer to as more primitive or basic technicals, which are heavily manipulated, and I see them getting trapped all the time in currency, in the stock market, tends to play out. And it was very interesting for me to see that, just a break test, which fails all the time, literally a daily basis in Forex. I'm like, oh, Tesla just did that, and Bitcoin, in essence, just did that. So it's interesting to see the differences here. And I want to explore, for example, an EMA that you're...
That's true, actually. I've never really sat down and like studied these FX charts of the currencies. I do wonder out of curiosity how they like operate differently.
Is it an idea that it's kind of a self-fulfilling prophecy that if all the big players use these technicals, there's nothing inherently powerful about the EMA. It's just a line. It's not necessarily a rejection point or something that price should move. But if enough people use that EMA, enough orders get into the market, then price must respect it. Is this the case that we're basically seeing, you think?
I could see that it's, there's some elements of that, but I also think that it's just, there's like a certain amount that price can realistically move without having some type of consolidation. And so I think EMAs just help us to identify like okay, maybe it's done enough consolidation and caught up to the point where it's ready to make another move. And I don't know why the math works specifically the way that it does on that, but I feel like it's just as much of that as it is the self-fulfilling prophecy fact.
Mentioning here the kind of how much it could move, or what is the ordinary movement. Do you use any deviations, average daily range, average session movements inside your strategy?
This is not something that I've been huge on, but it's something that I've added to my playbook recently. If you're going to be a swing trader, you definitely need to focus on the stocks that have the highest average daily range, because if you're focusing on stuff with a 2% average daily range, it's just not going to meaningfully move your portfolio like something with a 7-8% average daily range would. And that's something that you really need to think about, because obviously there's an opportunity cost of sticking your money in stuff that's not moving.
So the what you just mentioned here of 1 or 2% in a day, in currency, that's wonderful.
Yeah.
And the reason being is we can really explore leverage. You can even get 1 to 500 accounts.
Yeah, that's
Whereas
crazy.
in the stocks world, it's basically 1 to 1, right?
Most of the brokers that I use give you 1 to 4, up to 1 to 4 intraday, and then usually 1 to 2 overnight.
Have you found that restricting in any way in your career? Because new traders run towards leverage like that's their savior. You built a career in a 1 to 4 environment. Did you ever feel like it was holding you back, or has it been sufficient?
Definitely, it hasn't held me back at all. Yeah, I mean, I guess I've been blessed to have enough capital to where, you know, I don't really need to use leverage for the most part. I think there's certain times where maybe I'm trading less volatile stocks, but that give a great setup, and I'm swinging large multi-million-dollar positions, and I need to use leverage for that. But for the most part, I haven't really needed it, just because the majority of my career has been in small caps, and in small caps or OTCs, you can just get some ridiculous moves.
small cap
October ran,
trader.
like 5,500% intraday the other day. You know, and so when you get moves like that, like, why do you need leverage of any kind? Like, if anything, I want like reverse leverage. I want like
Tone it down here.
a quarter of 1% of my account in a stock like that, because that's just terrifying. You know, so if I'm putting 400% of my account in a stock that's making a 5,000% move, like, just no, there's no way to manage risk on that. You know.
When we look at the entire gain you've had over your career, which domain, for example, large cap, small cap, which asset class was the one that contributed the most profits?
I would say small caps overall.
Interesting.
Yeah, but it's definitely making a shift in recent years, just because I've been expanding my playbook and just learning how to profit from similar patterns, but on larger cap stocks. So like one of my good friends, Jack Kellogg, he told me that like the best time to try to capitalize on these large caps, which for the most part can be fairly choppy, but like for a day trade, is when they start behaving like small caps. And so one of the patterns that I'm super familiar with is like the first red day, when you get an overextended chart, a parabolic extension, and then it has a pullback. And if you know how to capitalize on that pullback, you can short it and make some good money. And in general, large caps don't really give that pattern very often. And so when you get a large cap that gets really, really overextended and starts behaving like a small cap, where you get 3, 4, 5 up days in a row with expanding range and volume, and they're gapping up each of those days, that's when you can actually bet big on these things. And so me learning that is like, okay, this makes sense to me. Like, I have
There's a video on
small
this.
cap plan,
If
so
you
I
go on
can
that Chart Fanatics channel, which guy is it?
Interesting. So I want to navigate this of like as
Might have been this guy, I think. Yeah, he talks about this like first red day strategy.
transfer this over to large caps. When large caps start behaving like small caps, that's when I can bet big on it and you know, actually have a decent edge there. And so just by utilizing that, you know, I've been able to have some pretty decent trades on these over the last like year-ish since I learned that. Really the first one that I ever tried was SMCI. A lot of people talked about this, but that was an amazing first red day back in February of 2024. And I didn't really do too well on that because it was the first time I'd ever taken this trade on a large cap. And I think I made like 40K that day or something. And then the same trade showed up again on MSTR in November of 2024 when that had its first red day from like 540 down to like 370 in a day. And that day, you know, I scaled up a little more. I think I made like 250K that day. And, you know, when the next one comes around, I'll be even more prepared and hopefully do even better. So just being able to recognize those patterns for small caps and when they start playing out in large caps is just this cool thing. And I only noticed that because my friend mentioned it.
For the last 2 years, a proud sponsor of the show is a top-ranked leading prop firm, Alpha Capital. And for the Touchstone 8 leading, having the $2,000 as your first account size, to then be throwing numbers around, not even going to talk about the millions in a trade or a million in a trade, but even just 40K, 200K, these are huge numbers. How do you mentally prepare for that kind of size?
I don't think there's any way that you can prepare, really. I think it's just, it turns into a number.
And
Just
you
through the
can't
reps.
detach.
Yeah, you kind of have to detach. Just through the years of doing this day in and day out, you get a little bit desensitized. You know, this might be kind of grisly, but I feel like it's the same reason that like maybe someone who works at like a butcher shop, like they might be desensitized to blood. Or if you're like an EMT, you know, you don't care about that stuff as much. It doesn't affect you because you see it every day in and out. And if you're a trader, these numbers, they just start to lose meaning because
Interesting.
trading money, like, you know, I was talking about the SMCI trade, like 40K or whatever. Like in real world, that is a lot of money. Like I can buy a ton of groceries with $40,000. But in trading money, to me, that's like nothing now. Like if I have a 40K day, I'm not even excited about it. I'm just like, okay, whatever, you know.
I think when you're placing the trade, you can detach. But when you lose an amount, let's say you lose an amount that is you could be like, that could be an annual salary for someone or something like that. And then you sat and say, what could have done with that money? Those thoughts will naturally creep in. How do you, number one, make sure you're not getting too bogged down in a loss, but at the same time, not getting too carried away?
It's inevitable, right? It's inevitable. It's just part of the game. Like as your account, like think about it. Like the more your account grows, the bigger your wins are gonna get, and the bigger your losses are gonna get. So can't really care too much, right? Just like all percentage based at the end of the day.
Having too much euphoria, because now a small lapse in judgment, which would have been maybe $500 or $1,000 back then, well, now we're talking serious lapse in judgment in terms of account size. How do you maintain groundedness or following the plan when you extend it out to this large capital?
I think it's about sticking to the process, and no matter what kind of numbers you're seeing in front of you, you just keep doing the same thing. And that's, for me, is trusting my trade plan, having a set risk that I'm allowed to lose before I enter the trade, having the max losses set at the broker level, and no matter what, I know that I'm willing to lose this amount going into the trade. So like, yeah, it might not feel great because I didn't really want to lose that much going in, but I was willing to do so. So even if it's a much larger number than it was when I started several years ago, I'm still okay with that. And I know that it's part of the journey overall. Like I had my biggest red day in, I think like since 2022, this week. I had a 98K red day. I almost had my first six-figure red day since my blow up on ILAG back in October of 2022. And, it didn't feel super great, but I was able to see the big picture. All I have to do is I zoom out and I look at my overall equity curve, and like it literally is the tiniest little blip there on that downtick.
It's like price action.
Exactly.
There's going to be down portions.
Exactly. And so I think that's the most important thing, just like seeing the big picture and sticking to your process regardless of what the numbers are telling you. And something that I have actually been trying to be better about recently is systematizing a little bit more in terms of risk, and it's something I still need to work on because to really excel as a trader, you have to scale up risk accordingly to the size of your account. And that is very tough to do mentally. There's very few people who have been able to successfully do that at like the perfect level. Jepez, I don't know if you've heard of him. He's I think he's from Finland. He's a trader who started out with an algo, and well, he just made now. He started out like systematically, but he's a really good example of how you can compound your account like crazy. He started, and I think a couple of years ago he was at like 30K, and now he's about to cross 8 figures in profits. And that's just because he's risking a set percentage of his account on all these trades, and whether his account is 100K or...
Okay, I'm... What is that? Expecting? Is that what that is? I'm expecting big down day for Google, big up for NVIDIA. Is there a reason for that? Or are we just hoping and wishing?
For 5 million, he's still risking the same percentage amount. And so if you have the edge, you could really scale it up.
Yeah, a lot of traders that I've seen scale up, they start off in percentages, 1% risk per trade, and then they end up just doing fixed dollar amount per trade. And somewhere along the way, the percentage game kind of, it just doesn't feel as comfortable anymore. So I can see your point here. This idea of, because what we're really discussing here is psychology, the ability to adapt to the numbers and whatever emotions that evokes in you. But when I explore this idea of psychology, especially because you mentioned someone systematic and coded into an algorithm, this is a debate I've had, and both ends of the spectrum are firm in that.
The TPU stuff? Yeah, it seems a bit overblown. Plus, I don't know if it was the podcast that we were watching on stream the other day or if it was when I was listening to my own time. But they made a pretty good argument of why like this TPU thing was like somewhat overblown. Essentially, the argument boiled down to the fact that like if you're a competitor to Google, do you really want to become reliant on their hardware? Like, what if they can only manufacture 200,000 of these chips, and they want to use, like, obviously they're going to use them themselves first and foremost, so you're like next in line. On top of like potentially be able to have like abusive pricing practices.
Their belief, which is interesting to see. But I want to explore this with you, this idea of like...
But like it's still like that's an issue for like Meta and like Tesla, for example. But like the lower part of the like, ecosystem, like I'm sure that will like eventually eat into like NVIDIA's moat. Google came out and said they still need GPUs. Yeah, probably that too, right? Because there's a lot of reports of people starting to get, even I got it actually, like rate limited on Gemini. Plus, there was like pretty hard to reach a cap for demand. Seems like the demand for this stuff is just kind of just growing and growing and growing right now. Jensen got TSM capacity locked. True. I mean, I don't know if that's true, but if it is, like a valid point to be making.
If you gave me your exact strategy and we spent 2 years figuring it out so I could learn everything, in the end, mine and your performance would be different. And a lot of people do say, well, the reason the difference in performance happens despite maybe an objective strategy or equivalent information is just personality traits or psychology, which is an interesting point. And in your sense, it seems like you didn't necessarily address your psychology. It was just years under your belt. And you, like you said, desensitize. You acclimatize yourself to any emotion. The greed you maybe felt, desensitize. Any big losses you took, you start to get desensitized over time. Would you say psychology is something you have to take care of, or it's something that takes care of itself as long as you're following the right plan over time?
It's not something that I actively go out of my way to take care of. Definitely, I think if you're doing the right things, I would say the psychology just kind of takes care of itself. But I do know there's lots of successful traders like Lance. He specifically sees, I believe, like a trading psychologist / coach. I think Jonathan Katz, I believe, is his name. And he's done some videos with him. And I think there's something to be said for that. Maybe to unlock the highest levels of your potential. But it's not something that I've personally looked into a ton at this point. So maybe that's holding me back.
I don't think so. To be honest, in your stage, I don't think so. But if we are to explore, because this is kind of, if we can kind of divide a pie between, you have your technical edge, you can have risk management, you can have fundamentals, and then you have your psychology. If we are to distribute that through a pie chart, which one would you give different weightings to?
What are the pie elements again?
So let's start off with technicals, and then fundamentals, risk, or account management, and then psychology. Let's split it between these four. How would you weight each one?
Probably the most important thing is to have some sort of edge, because it doesn't matter to me any of the other things if you don't have edge. So I would personally say for me, edge comes from a combination of technicals and fundamentals on most plays. So to me, I don't know, I would say maybe...
Where are you skewed? Are you more technicals driving, or is it more fundamentals driving?
I'm definitely more technicals driven, because I just feel like there's too many times where technicals and fundamentals don't align, and I think maybe in the end, after 10 years, whatever, fundamentals will play
There's studies on this, right? They've done studies on this stuff, and it's like, I mean, I don't know, I haven't read like their process of how they came up with this, so potentially flawed study. But it's a pretty compelling data points they had that like essentially fundamentals have little to no impact on the market in the short to medium term.
It's just, the saying, markets can remain irrational longer than you can remain solvent. And we're seeing that play out right now with the quantum sector, where you have stocks like RGTI, IONQ, QBTS, QUBT, all of these terrible stocks. I believe most of them have very little to no revenue. And they're multi-billion-dollar market caps. And in the last week, they're up like 100% almost, after a 2,000% run and then going sideways for 9 months. And so this is just an example where you have short sellers betting against these things because fundamentally they're terrible companies, but technically it doesn't matter. They made a beautiful run, they got extremely tight, and they broke out of a perfect base. And so if you're too focused on fundamentals, you can just get absolutely destroyed. Just fighting this stuff because it doesn't make sense, but at the end of the day, it doesn't matter. So that's why I prefer technicals, because if when I listen to those, it stops me from being stubborn on the wrong side of a trade. And on the flip side, like, you can have great companies that are super undervalued for a long time just because, the technicals just they don't add up. Like UNH it got absolutely crushed. Obviously, there were some fundamental aspects to that, but it was very undervalued for a while. And if you were buying that aggressively on the front side all the way down, like, you could have gotten destroyed, especially if you had leverage there.
Would you look at certain things like the COT report, or would you look at what the big players are trying to do and try and assess what is already priced in, or are you trying to read sentiment through price action?
Yeah, I wouldn't look at a report like that. Honestly, I've never even heard of that report. Yeah, it's just through price action. And you can also see what people are saying on social media. There's some aspect of that, but the biggest thing is just looking at price action, volume across sectors. If institutions are accumulating these stocks, like, it's very obvious when you look at your scanners and you see all of these stocks in the same industry. The charts look very similar. They're all doing a ton of volume regularly, consistently, day by day. So.
Yeah, that definitely regret that, right? If we had been scanning for some of this stuff, a lot of these health plays, like when we went back and looked at these charts, So quite obvious. There's a lot of accumulation happening on these things, right? Just unfortunately, we were not prepared. So that's what it is. But we will be mindful for the next time.
You look at diversification if they're not overexposed on one sector and so forth. Do you try and apply that when you are, day trading or trading the stock market in general?
I prefer the
Correlations.
saying, like, I forget who said, I don't know if it was one of the great investors. He said, I prefer to have all my eggs in one basket, but watch that basket very carefully.
Okay.
I don't remember who that was. I don't know if it was.
That's a good saying.
Yeah,
I
I don't know if it was
haven't heard it
Ackman or someone along those lines. But that's my personal philosophy. Like,
Okay.
I would rather have all of my bets in concentrated areas that I'm very convicted in, and then just be watching it like a hawk and make sure that everything is going according to plan, versus trying to diversify and just putting risk on other setups that might not be as good as the other, the setup that I prefer.
I saw it just yesterday. I think it was maybe Ray Dalio's was quoted in saying that when you are worried, you don't need to worry, and when you're not worried, you need to worry. And that kind of reminds me of if you watch something enough and obsess over it and see the full picture and you're worried about it, you'll probably be okay. You don't need to worry about it. What space does crypto hold for you? Because it seems like it's not your main domain, but it seems like you still interact with it.
Yeah, so crypto specifically, I don't trade like crypto itself. What I do is I trade the ETFs that are listed, or the leveraged ETFs, or the options for those ETFs that are listed on the stock market. So I don't, I don't trade actual Bitcoin via perpetuity or anything. Yeah, I don't trade it. So.
Okay. Well, we mentioned earlier pyramiding, and this is kind of a risk or entry protocol. What other styles of entries or sizing in would you or risk sizing would you do?
Could you elaborate a little bit on that?
For example, if you have a very high conviction play, would you size up? Or is it always standardized risk? Maybe not percentages anymore, but fixed dollar amounts based on conviction. Or, for example, if something is sizing up as a swing trade, maybe you size up because I can pull out an intraday amount and then let a runner go. Is there any other creative things you may be doing? For example, in my case, I've been standardized my whole career for 1% risk, and I thought I was doing the right thing because I was just taught that, and it's the way I did it, and it's all I know. And then through the show, I've spoken to so many traders that do creative things with risk. And this year, I started to change it through inspiration of my guests, and I started to realize maybe it was a form of holding myself back when I have an A+ setup that maybe is not that frequent, but it's high conviction. The data's behind me. Why not do 2 or 3% risk? It's not the end of the world. And I tried it first time in June. And it was to my favor. So then that became something that was, this is something I can now continue to test and explore. Pyramiding I've never tried, and there's other things that I've seen people do. So I just wanted to explore here because you've sized it up from a small amount of money to a lot amount of money. What was in there to enable that kind of growth?
Yeah, exponential bet sizing is something that has helped me a lot in my later career to really go parabolic.
Exponential bet sizing. What do you mean by that?
So this is also something that Lance Brightstein talks about a lot. So I definitely recommend watching his videos on that. But basically, it comes down to not betting just 1% on every opportunity when you see it, because not all opportunities are created equal. I think the example that he likes to give is poker hands. Like, there's plenty of poker hands that are positive expected value if you play them, but not all poker hands have the same expected value. So like,
Dove,
if you get
hello, Dove. How are you? This wonderful Sunday night or day. I don't know where you are. I guess could be Monday as well.
Jack suited, you probably would still want to play those in most circumstances, but you're not going to bet the same on that as you would on a pocket aces, because did I say Jack suited? You can't be suited. But my point is, like, you can't expect to bet the same on something that has a lower EV and get better results overall. So the point is, you want to bet exponentially more when you have these super rare setups that don't come along very often, because you know that the vast majority of the time you're going to win on.
Well, how are you? Tired. Woke up early to go on a hike. Then I was reading some book about futures trading. Now I'm like I'm not even back testing. I'm like testing it live on like a sub account for like algorithmic trading. Like, obviously I already ran the back test, and I'm just seeing how it works live. But it's a pretty busy Sunday. Other than that, kind of just the usual shit. I was watching some interviews. Yeah, the microphone came. I'm using it now. You told me it sucks. Tell me there's no difference. Because if so, we're gonna return this thing. I mean, I'm also sitting a little bit further, so perhaps if I'm closer, it's a bit better. Want to backtest a martingale strategy. I mean, it works until it doesn't, right? What do you need to backtest about that? I can tell you that right now. Works until it doesn't. Well, honestly, it's pretty viable, right? If you like start the beginning of the Martingale with like relatively low account size, and you're doing it on like in a higher time frame, it does generally work, right? But yeah, if you're like martingale on like the 5 minute, I wouldn't recommend that personally. Audio sounds cleaner, no popping, clipping, and pretty clear, but still pretty quiet. Where is this thing? Seems pretty loud on my end. It might be you, because like when I'm talking on this thing, it's like spiking into the red. So I don't know like how much loud. Maybe I'm not understanding how this barometer is supposed to be working on like OBS. But I don't think it's supposed to be going into the red when I speak. Maybe not, maybe not. We'll see. I guess we'll see when the recording of the stream is up on YouTube how it sounds compared to the previous ones. Because right now it seems relatively okay. When the recording of the stream is up on YouTube how it sounds compared to the previous ones. Because right now it seems relatively okay. Interesting. Interesting that you say that though. I mean, I haven't played around with the settings either, so perhaps we can alter it a bit if that's still the case.
On them, and the vast majority of the time you're going to make a lot more than you would lose if you're wrong. And so when those come around, you want to bet, instead of like, you know, 1 is your normal risk and betting 2 on this, you might want to bet like 8 on when you get just an absolutely incredible setup, because it's just so likely to work. And when you do that, it just juices your gains to a ridiculous amount.
Okay, let me push back on this from what other guests have said to me.
I think there's an adjustment for when the microphone goes to the video encoder. But then there's also a sound adjustment for mixing the audio with the stream output. A sound adjustment for mixing the audio with the stream output. I have to look at these settings. I'm not sure. I can't say I'm like an OBS expert by any means. Maybe it's like one of the audio settings in terms of like the stream. We'll play with it later. I'm not sure. I don't see anything that stands out particularly. Maybe we're wrong though. I don't know. I'll do some research with a good solution for you. Yeah, if you have something to do. 'Cause, I mean, I could turn the gain up on the microphone, but I don't know if that would make me any louder. I think it would just cause it to pick up more background noise at this point. To be determined, whatever. We have time to play with it. Worst case scenario, like we'll return this and get something else.
Number one would be, if you have high conviction plays and opportunities, and then you have a hierarchy of these are my A+ setups, these are my A, B+, and lower conviction rates, I guess as a signal of win rate. These
Yeah,
are
I'll try it
high
out.
win rate, these have
Although I'm
lower.
curious if
Like,
anyone else feels the
why
same
would-
way as you do, or is this just you?
take the ones that have a low
Because
expectation.
it does seem much louder than previously. I'll say that. Even when listening to back live. It does seem much. I'll say that. Even open when listening to back live. But I also have my Windows setting like max sound. So maybe it's because of that.
I take the worst off setups. If you have these high quality ones, why not only take them?
Well, again, just because there's still positive expected value in taking those trades. You know, it's like if you see money lying on the ground, would you pick it up? I mean, the answer is I'm in trading still at this point to make as much money as I safely can. And so if I have setups that come throughout the year that are not as good, I still want to be putting risk on those setups because they can add to my bottom line and keep me in the flow of the market. Versus it's a lot more difficult to execute. In my opinion, there's a lot more pressure on you psychologically if you know, okay, there's going to be 2 opportunities throughout the entire year that I'm going to put risk on. And if I mess these up, like, I'm going to have a red year versus, okay, there's going to be 200 opportunities. 2 of them are going to be insane, but I'm going to still be green pretty good going into these opportunities and have a cushion and be in flow with the market. So that's what I would argue.
Would you say it's accurate? Because I've heard traders say this, that majority of your profits come from the minority of your year.
100%.
To the effect, I've heard traders say that 2 months of the year make my whole year.
Yeah, I look at the data for 2024.
Yeah,
I
seems pretty
exact numbers off
consistent.
the top of my head, but I believe it was like, I want to say like the top 14% of my days accounted for like 82% of my profits or something like that.
Oh, wow. Truly an 80-20 split.
Yeah, exactly. Yeah, Pareto principle.
And was that by virtue of sizing up on those 14 days? Or it was just, these were my high conviction plays. They don't appear that often, but these are the ones that contribute the highest risk to reward.
Yeah, I mean, I think it was a combination of both of those. That's when the best.
That's high risk to reward and high risk.
Yeah, high risk to reward, high win rate, and that's when I chose to bet exponentially. And my year could look very different if I didn't trade like that, you know? So
Now, one of the biggest ironies or conundrums of the market is this idea of being wrong and loss. Because in general in life, if you fail at something, you go back to the drawing board, you try again, you fail an exam, let me go study more. And this is like a feedback loop. Whereas obviously in the market, you have to realize that losses are baked in, and sometimes a loss means you change nothing. This was a valid loss. This is part of the plan. And the irony here is that the distribution of events will not be nice. It won't be win, loss, and you could be smashed with a losing period of 7 in a row. And the reason I'll bring this up is because when you are dynamic sizing, you might get a funny moment when the market is laughing at you and basically saying that big play that you sized up on, yeah, we're going to lose those 2, and then the ones you win on, they're the ones you had low conviction on, you low risk. So even though your win rate might look okay, your risk reward might look okay, just by virtue of the sizing that you did, you might be in the hole and an extended period of drawdown. And if it was in another scenario, equal risking, just to play devil's advocate, you would have been okay. How do you navigate those? Because I know if you just zoom out, it's going to be okay. But I mean, navigating those.
You have to be careful, right?
Yeah.
If you're gonna size up like that, there has to be a good fucking reason to do it. Like that's really the main takeaway you should be having from this. Like you need to be seeing like a swing trade potential or like an extreme outlier event statistically with like lots of edge. If you're just sizing up for a trade that you see once a week with like size, the biggest size of the year, probably shouldn't be doing that. Probably should not be doing that. Like those kind of trades should be trades that appear a handful of times a year.
This
If
ironic,
that.
behavior is happening.
I think that the cool thing about the extra conviction setups, usually for me, that comes on mean reversion setups when you get
Oh, interesting.
a hugely overextended chart, either to the upside or to the downside.
So why do you think that is? I would have assumed this accumulation and a consolidation and then a breakout, and you're running with the trend. You're running with the big movements. A mean reversion or reversal. Why is that the more asymmetrical play?
I think to me it's like a win rate thing. So like normally I like breakouts, but they do inherently have a much lower win rate than a mean reversion type strategy if you know how to time it correctly.
Explore that with me. I would just assume a breakout or with the trend would be more favorable, and trying to, if I'm to use the phrase pick the top or trying to reverse, catch a falling knife kind of term, mean reversion is by nature reversal, seems more dangerous.
Not really, right? Like if you actually give this some thought, not really. Because if you think about it, like let's say you were trying to like long Bitcoin here, for example, or like and it was like dumping hard, and like you're doing some kind of like mean reversion strategy, and like let's say you got in like a little bit early, and you take like a small loss. Like the bounce is coming, right? The bounce is coming at some fucking point. You may not have timed it perfectly, but like your trade thesis is still correct. So like you can take the next opportunity and like size up a little more. If it's wrong, then like repeat, right? And eventually you're gonna like catch the low, and then when it starts running, like all these small losses get made up for instantly, and then some. Ideally, you're not in this scenario where you're taking these like small losses. Like you're trying to pick your entries well and getting out break even worst case. But in the world where you do take like a small paper cut loss, you do have this option of doing this. It's like lots of ways you can play it with like increasing probability of being correct the more times you're wrong. Assuming it's not going to zero.
More dangerous, I could agree with potentially, but the win rate is just better. It's a fact if you go look at the data, just because of the nature of how these things play out. So when you get in a breakout, the idea is you want to have really good risk reward. Like you might buy through opening range highs versus low of day. And that's like a very tight risk. And if it runs, you might hold it for a month and get really good risk reward. But you're gonna get stopped out when it breaks through low a day, whether that's that same day or 2 days from now when it fails and then reclaims later. Like there's just a lot of messiness that can happen in breakouts. And that means that the win rate is just a lot lower versus when you get a hugely extended chart like MSTR, when it went up to 530, 540, the odds that MSTR is still gonna be trading there a day from now, 2 days from now are just incredibly low at that point. And so it's almost like it doesn't really matter where you enter at that point. It's just the big picture chart is just so overextended. The rubber band is so far stretched that at some point it's going to snap and come back down. And so you don't have to be precise with your entry, and your win rate is just a lot higher. And so that's where like I just get really convicted on those because I know this is unsustainable. Versus a breakout, like a stock doesn't have to go up. You know, it can get really tight and then just do absolutely nothing. You know, there's plenty of times where that happens. Yes, I'm going to bet on breakouts when they look great, but that doesn't mean that they have to go up. But any stock that goes straight up will have a pullback at some point. It's just a fact.
So
True.
I got a lot to explore and add. I want to start off with, if I was a new trader and hearing this, I would be like, cool, I'm going to try and pick the top every time because this gives me the best opportunity, a volatile, elastic band popping back. I want to be involved in that. So first of all, let's try and clarify how to do this in a safe way. And I want to share a story with you. So I had a guest who's a market wizard, and he's maybe he's in his 60s, I'm not quite sure, and he was managing $200 million himself as a hedge fund owner, and then in his career up to $700 million. So he's a very competent trader, 30-year track record kind of thing, and his whole career was based on reversal trading. And I was like,
Let's talk about Jason.
this goes against what we are taught as traders 101, follow the trend kind of thing. And when we explored it, he was like, okay, so Waqar, when you see a trend, what is going on? It's like, oh, the buyers are getting in and the sellers are getting out. So you have the tide on your side. It's like, okay, and as you get higher and higher, what's going on? It's like, oh, there's more adding. I guess they're pushing and more people are catching this tide. It's like, what happens when it keeps going all the way to the top? And it's like, okay, now you reach a point where there's like max buyers. And then how's it going to go higher? I was like, that's true. You can't. There's not an infinite amount of buys that can go. He's like, yeah, exactly. So you reach a point where it's like on an oscillator, it's reaching 95, it's reaching this extreme. He called it crowded. It's like at some point you're just in your shock events, and it's like sometimes it'll even be on a positive news that is just like the buyers start to get out, and it's a cascade, and it's just like it runs back to the mean reversion, as you're saying. So initially my gut reaction would have been like, this doesn't sound like it's a favorable play. But when he explained it like this, I was like, this makes a lot of sense because it's just built up tension. And at some point, it has got to break. But how do we take this philosophy and kind of this wisdom behind it?
You have to be careful though, right? Like the things that we're talking about, like this, you have to do this. Like, it's one thing to go up or down in price in like a structured manner, right? Like this, like a controlled structured move up or controlled structured move down. It's another thing to do like this kind of shit where it's just like, and then it just gets like more parabolic with like each leg. Like these are the ones that you want to be doing this kind of strategy on, where it's just like the angle of like the legs is getting like more and more aggressive each time, and you're starting to reach like crazy outlier territory on like the oscillators, or like exiting the Bollinger Band, going too far from the EMAs, whatever the strategy you're using, right? Like this is the kind of shit you're looking for to do that. Because in this world, these moves can go for like a long time, right? It's like there's not necessarily like a strong case to be made for like a mean reversion there.
And layer it into, okay, let's just not keep picking highs. How do we know how to sensibly do it?
That comes from studying the past. Again, I mean, I'm going to sound like a broken record here, but that's just the best way that I have found to accurately pick entries and know when to get in stocks. So, I mean, there's plenty of examples of stocks that go up and might look like they're decent short, and then they just keep going up. But I think the more you study the past and know how the biggest runners in history topped, the better you can identify in real time what these factors look like that make a run unsustainable versus being sustainable. You know, when you have a stock that makes 3 massive green days and then has some tight inside days, you know, that's consolidation, that's price acceptance. And there's a decent chance that that might not be a great short because, you know, could it break down? Yes, but it could also continue higher. But when you get a stock that goes parabolic, and just keeps speeding up on more and more volume, at some point, like I have seen from the past, that will have a decent red day, the more overextended that it gets. And you can classify this based on how far it is out of the base that it just made. You know, how many days has it been running for? How far of an extension is it? How big is the market cap? What is the average daily volume like? How much has the volume increased? All of these factors. How far extended is it over its 50-day moving average or its 10-day moving average? And when you get all of these factors aligning, that's where the odds just become more in your favor. And you combine that with an intraday entry strategy, which is like, okay, I'm going to enter once this breaks low of day with a high day stop or whatever. And at that point, like, you have a very fixed risk to reward, and you know what that is. And so if it reclaims and makes a new high day, you stop out. And then it gives you an opportunity to get back in later if maybe it goes a lot higher, and then it breaks down again. You can short the first 15-minute candle break or 30-minute candle break after high day. There's plenty of ways that you can structure an entry, but I think it's just finding the way that you can get an intraday entry based on the conviction of the overall daily chart.
So I want to explore a couple of things. And number one is conviction. Now, conviction could be a feeling. It's like, oh, I just feel like it's going to reverse. I've seen this play out. My intuition is getting involved, market experience, and this is a gray area. So I want to explore that, and then pairing it to basically my opening question. The reason I asked it is for situations like this. Is trading an art or a science? Because now when we're talking about, you can add all of these confluences based on momentum and deviation and, you know, an oscillator, how overextended it is. You can start to say, okay, at some point this has got to reverse. But to your quotes earlier, it can also keep going. It depends how much liquidity you have, how big your account is. How do we safely do it in terms of not to overfit? Because then you can add 20 listings of like, okay, these are the reasons that market should reverse, but then how often is all 20 going to be there? How do you do this in a way that can be as scientific as possible?
I'm not a huge data guy, so it's a question that's difficult for me to answer in that regard, honestly. I know that there's people who have crunched the numbers and they know the exact percentage, et cetera, that it needs to be overextended.
The reason I ask is because you kind of said, okay, let's study what happened at previous highs and how they kind of sprung back. Was there anything you noted that is worth mentioning?
Yeah, I mean, the biggest thing is the blow-off volume and the increasing range and typically gaps.
I was gonna say, like,
So maybe that's not
exhaustion
really
gaps, right? When you get like that, when it's like going parabolic, and then like you start to see like the daily candle, the last two daily candles both like gapped up on top of it. Usually like a pretty red flag is about to come back.
The Forex market, which I'm assuming is
Not necessarily.
24/7. I don't know how that.
It's 24/5.
24/5.
Yeah.
Okay. Yeah, I don't know if there's gaps in the candles then. If they're
Not really. You have kind of imbalance, but sometimes on the market open over the weekend, there might be a news
okay. Yeah.
gap.
Well, you know, for daily charts on stocks, which only show the intraday action on the daily chart between 9:30 a.m. Eastern time to 4 p.m., like all the action in after hours, etc., doesn't show up. And so when you have a stock that is continually moving higher in after hours, like there's a huge gap on the daily chart. So if something, you know, for example, OKLO is one that I'm potentially watching for a parabolic short this week because it's starting to really speed up on the daily. In my opinion, it would be a lot better of a setup if it went a day or two higher, but it's starting to get to that point where it's interesting me a little bit. And these are some of the factors I look for. But like if it gaps up, the gap that it had yesterday, not yesterday, but the previous day was like $3 or $4, I believe. And so, you know, if it starts having much larger gaps, like a $10 gap and then a push off of open, like to me that's like a sign of euphoria. Especially if you look at the 5-minute bar off of open or the 15-minute bar, and just see like the volume versus the previous days. If that volume is just like enormous compared to the other days, that's another good sign of like this is blow off euphoria.
And I guess you've got to pair it to sentiment and say, okay, there's no intrinsic value. This is not something that has been revealed to the market. Like, oh, this is a bullish factor. It's like, okay, nothing has changed. It's just euphoria in price, not necessarily euphoria or intrinsic value.
Yeah, I mean, they've gotten some contracts and stuff like that. But my understanding is they're still a pre-revenue company.
Yes, easy.
Don't quote me on that. I just read that somewhere. But I mean, to me, the main thing that is important is just the extended chart. But, you know, all of those factors align.
Back to this dynamic sizing, because that's how we ended up in this topic. When you have pro-trend scenarios, breakout scenarios, counter-trend, and then you have the day trades and the swing trades, you know, you have a lot of variety. And I can see where it comes from because, as you said, like not every day is the same, and there's only pockets of opportunity across the year that are really, you know, high conviction, which is why it makes sense to be dynamically sizing and modifying things. With that being said, what is your philosophy in terms of conviction and low conviction and sizing high and sizing low? Is it just a factor of win rates here to determine conviction, or is it overall assessment? Because it could be a lower win rates play, but you just see it's a 1 to 7R. So it's like, okay, this could be high conviction by virtue of risk to reward. So how do you define
I wouldn't do it by that.
I'm not.
I think the best. I mean, I don't know. I guess it's subjective, but I would go about it by like the time frame and how much edge you're seeing, right? Like if it's like overextended on like the daily or whatever, and then you go into like the 4 hour and it's like hella overextended on like bull divs, and it's like just finished grabbing like a bunch of like high time frame liquidity, so on and so forth, and that's like a juicy trade setup, right? Whereas if it was like this weekend level when it came down just like ding, not exactly the juiciest of setups. Looking pretty strong though. Are we about to start going here or what? Or what?
systematized about that either, to be honest. I think it's just kind of a gut feeling
Interesting. Okay.
based on my experience in the markets.
Or what's another way to phrase it that like works well? To me, it's like an inverse relation. Like the bigger of an outlier that you're seeing, like for like the tariff dump, for example, right? Like how often do you see moves like this? Pretty rarely, right? Same with like the MSTR blow up that he's referring to. Like how often do you see moves like this? So like the bigger the outlier that you're seeing, like the more that you're justifying to size into that trade. At least for me, at least that's the kind of way I look at it.
I don't think always I'm only betting larger on high risk. I mean, on higher win rate setups, because there's certainly breakout setups that I'll bet more on. But like for example, the Bitcoin breakout, like the original risk was 10K. Which is extremely low for me, because if I get an amazing first red day setup, I'll be willing to risk 100, 150, maybe even 200K on
There's
it.
a huge deviation
Yeah.
in risk.
Yeah.
It's not like a 1% becomes 2%. It's a factor of 10.
Yeah, and that's the whole exponential sizing thing.
Okay. Super interesting. Okay. Going into.
I'd be very careful with that, right? Like he's talking about this kind of thing that Lance Brycesign talks about. Where like I forgot the number he threw out, but I think he said like in that situation he'll risk like 10% of his account. But there's like a lot of like subjectiveness to that, right? Because like 10% of your trading account, while you have like another bigger spot portfolio, etc. Why doesn't everyone just short MSTR? They did, right? This whole move down is shorted quite heavily. But like now it's like the risk reward for shorting this is like not really worth it, right? Like sure, maybe it makes like another like lower or so, but quite likely these things due for a pop here pretty soon. Yeah, a lot of people were shorting this. And a lot of it wasn't related to like the MNAB stuff. Shorting MSTY was like one of the like derivative products. I'm not sure. I don't keep up with this stuff, so I don't really know what's. I'm not sure people are shorting this as well. But I've never like done a deep dive into what's like going on with this and like STRC and blah blah blah. So I'm not the best person to ask in that regard about that stuff. I feel like there's a guaranteed wins. Probably not, right? Like that statement in financial markets is always suspicious. Like a guaranteed win. Like when do you ever see that? Like no free lunches. Always some kind of risk. But maybe because I've seen some people make the case. Like for instance, that Meet Kevin guy on YouTube. He does talk about how like that those MSTY and whatever are like doomed essentially. Is Bitcoin going here or what? The corn.
High conviction or low conviction. Maybe there is a difference here. I want to talk about trade management. The reason I ask is because
I'm trying to figure out how much it costs to short MSTR and MSTY. I know they're going to zero, no doubt. I don't know if that's necessarily a fair statement. They're selling shares to pay dividends. Yeah, but like MSTR already came out and like they already changed that. Like they're like one, they raised like that massive cash pile, and two, like they're now like willing to sell Bitcoin kind of thing. Like if that essentially like what they're doing is like if the MNAV is above like some number, let's just say like 2 or 3, then they'll like issue equity to raise money, and if it goes below like 0 or to below 1, then like they're willing to sell Bitcoin. So, and also like those derivative products seem quite beneficial, right? Like they seem that like there's a lot of action going on with those, at least in terms of the volume. What will they do when they have to sell all their Bitcoin and pay their dividends? I don't think they're anywhere near that. I don't think it's even like remotely close. I think they have their Bitcoin can cover that like 1,000 times over, if not more. But maybe not though. Like I'm just like throwing numbers out in the air. Like I haven't researched it per se.
Philosophy has been, I'll get into a trade even if it's lower conviction, but I'll be very quick to break even that trade to de-risk. And if I get wicked out, so be it. But the way I'm trading is like I'm trying to capture when the momentum is getting in, so it should ideally be a tap and go. And if it's hanging around, it's not a good factor for me. So I will be very aggressive to break even. What is your philosophy on trade management and specifically around break even?
Yeah, I do that a lot as well. There's certain people who I'm probably fairly unique in terms of larger small cap traders in this. Most people that I've talked to, they have like a specific risk level that they stick to kind of no matter what. Whether that's, if you're shorting, you short a lower high on an extended daily chart versus high of day, and no matter what happens, you're leaving your risk level at high of day. But for me, I'm fairly dynamic with it in terms of what the price action looks like. And if it starts behaving in a way that I wouldn't expect in an ideal world, I'm very quick to de-risk that and maybe, get to the point where like, okay, if this is reclaiming my average, especially if after I pyramid it, I'm just going to downsize a ton versus keeping all of that on versus high of day, like a lot of people would do.
Same. I do something similar actually. Like if I'm getting filled on a fib, like okay, let's say I'm have some fib drawn. Like a lot of times, like the stop loss intention is to be here, right? That's like the stop wherever the one level is. But like let's say I got like filled and it bounced and starts to go, I'll put the stop on the bounce. If it's starting to look sus, then I'm not getting a chance to like break even. Like the order flows like not following through, tape's looking weak, so on and so forth. So I definitely fuck with that approach. Don't do it too often. Usually I do get the opportunity to get break even, but there is the odd scenario where things are looking pretty sus.
Under the opinion that when you have these amazing setups and you get in with big size, like they really shouldn't be reversing and coming back to your average if they're going to work most of the time. There are obviously exceptions to that and certain plays where it might be more choppy inherently by its nature, but I don't really want to be in with huge size at break even ever. I'm very uncomfortable in that position because that is where my largest losses in my career have come from. The largest loss that I ever took in my career was where I went all in short on a pump and dump, expecting it to go straight down, and it did, and then immediately reversed, and I didn't take it off because I was thinking I was risking high day, and it blows through high day, and I'm just sitting there like a deer in the headlights, already down multiple hundreds of thousands of dollars, and it just keeps going and going and going and going. Like, I don't like being in that position, and I know what that felt like, and so now, I'm just, if it's not working, I'm in big size, I just get out immediately. That's how I manage trades.
When you have a factor of 10 risk difference between your lower and higher entry types, when let's say you're doing an aggressive play or more risk on the table, and it's running in your favor, so everything is good, and maybe you break even the trade, so you know that you're not going to lose anything now, and then you have, let's say you're 1 to 2 up, and it's okay, we're going good in profit, and then you have a healthy 50% retracement, and those swings whilst you are in the trade are larger. It's an interesting mental thought to say, like, if I'm willing to risk $1,000 on a trade, then I know my worst case scenario is $1,000. But if you are now 4,000 up and it goes back down to 1,000, you've actually lost 3,000 in unrealized, which is greater than your risk you're willing to lose. It's just unrealized, and that can be a more burdensome feeling. Talk to me about that when you are now risking a lot larger, and that swing is now 10x what you're used to in terms of numbers on the screen. The roller coaster of emotions in the trade, even when you're risk free.
So when you're in a trade, there's always dynamic expected value. If you're shorting an overextended stock, and the stock is still green on the day because it's on its 6th green day in a row and it gapped up 20% that day, the odds are pretty good in your favor that the stock is going to come down. But if you enter there and now the stock goes down and it's straight down and it's down 20% on the day, whereas before it was up 20% on the day, the odds are no longer the same. And so depending on the overall time frame of your trade, you definitely need to be, in my opinion, actively managing your overall risk exposure. Because if I'm in something that makes a straight move after my entry and I'm in huge size and then it starts reversing off of that straight move, most of the time I'll lock in a good amount of profits unless I'm like specifically thinking this is going to be a huge big picture swing trade. Because in that point I'm thinking, okay, whatever intraday move it makes today, I don't think this is going to be it by any means. And I think, potentially it's only 5 or 10 or 20% of the overall move that it could make, and I don't want to risk losing my position by getting out and locking in profits here. But if I'm in a day trade, man, and I'm in huge size and it goes my way a lot and it starts turning, I'm taking the vast majority, if not all of those profits, because usually it gives some kind of retracement and then it'll like consolidate and then make another leg. And so usually it'll give another entry point.
Yes. You know, I see a lot of TikTok traders and
Interesting.
influencer traders kind of making reels at this idea of if you break even a trade or if you move your stops to break even, you didn't trust your
I
analysis.
mean, we do that too, right? We did that too, like in the long we got on down here. Like we had to take profit initially up here, then add it back later on. But like, I think he said he closes the whole thing and then tries to get like a re-entry. That I don't like doing per se, because you never know if you're gonna get like the clean chance to get back in. And if you like close out entirely, then you just like cut yourself off, right? Like they don't give you the chance to get back in, and the thing just like runs off on you. So it seems like quite the aggressive way to manage risk, but whatever, each to their own, right? Each to their own.
You haven't done the work correctly, and just overall managing a position, it should be a more set and forget thing of like if you made a decision to get in, you got to see it through. I don't agree with it, and I heavily managed position. It seems like you're also in that camp. What would you say to that kind of belief of like once you're in, you got to see it through inside the stop or profit?
I can understand that argument because most of the time your average price is a fairly irrelevant level on the chart overall versus like where you should be risking. What most people say is that you want to exit the trade when your thesis is invalidated. And for most people
On the loss side.
Yeah, correct.
Okay.
Correct. You know, you would want to stay in the trade and give it the chance to work out until your thesis is invalidated. And for most people, that's going to be when it breaks your risk level that you had set when you went into the trade. And I just think there's multiple ways of looking at that. For me, my thesis might be invalidated when the stock isn't doing exactly what I expected it to do, which is go straight down for my entry when I'm shorting, or go straight up when I'm buying a breakout. You know, and to me, just the fact that it's chopping around there is invalidating my thesis. So there's definitely two ways to look at it. And
Yeah, I see your point.
I don't know that there's a great answer there. I mean,
No,
Yeah.
I see it because the information you had at the time of entry, the invalidation was here, high of previous day, let's say. And then as you got into the trade, you are monitoring. Other people won't be monitoring, but you're monitoring momentum, reaction speed. Do the participants get in the direction I want them to get in? If they're chopping around, this is a bad sign and maybe a signal or an invalidation. Therefore, you can now monitor or manage this position. Whereas if it's tap and go, this is a good sign. Don't need to manage it. And I guess others, let's say a swing trader, they wouldn't be adopting that kind of immediate because they're not trying to time the market the same way a scalper or intraday trader would be. Is a time of day of entry important for you?
No, I will say this. Like I'm in the same boat. Like for me, like I always put my stop break even, right? Whenever it's like the met my criteria for moving the stop break even, I always do it. Especially when I get like a pixel perfect entry, essentially, right? Because like if I'm like getting in using a fib, and it's like coming down, and I get like, let's say I have like all my orders in here, right? And it gets all of them, boom, and it starts bouncing. Then my average entry is like right here, right? So like if I go and I put my stop loss break even, there should be no fucking reason we're coming back down here, right? Because at that point you're doing like a retracement of like an 886 of like this impulse. At that point, like your trade's invalidated, right? You should not be retracing this deeply if it's gonna go. More often than not, like yeah, there's a world where it goes like ding and starts going. But more often than not, it's not the case, right? More often than not, it's gonna go like ding, ding, ding. So at that point, like the break even saves those losses, and then you can just try it again later. So yeah, definitely agree with that break-even spiel a lot.
yes, it is. I think you tend to get a lot cleaner moves around open. If you're trying to buy a breakout at like 1 p.m., I found it tends to be lower volume and lower follow through, and that's just something that you kind of have to keep in mind.
It would be something that you consider, or it would be almost a form of invalidation if it's in the tail end of the day?
It really depends on just the overall daily setup and like how convicted I am in this thesis in general. But you know, if the perfect daily chart is breaking out at 1 or 2 p.m., it's not going to stop me from buying. But mainly, like maybe there's smaller intraday trades on like a day one gap and runner that I would buy the morning breakout on if it's happening at 10:15 a.m. But if it's happening at 2 p.m., I'm just like, it's probably going to be a fake out, you know. So that's probably the main time that I would care about that versus a larger picture chart.
Referencing back to what I just said of like your unrealized loss on a retracement can be greater in dollar amount to your initial risk. So with that philosophy, do you have any, as you start to run towards profit now, any approaches to trail your stop, not just break even, but okay, protection mechanisms, or is it just trying to find that first impulse and lock something in and then leave the rest?
Yeah, there's plenty of ways that you can trail. You can trail based off of prior bars, and you can choose the time frame there. Like if it's a super clean move, an exceptionally clean move, you can trail 2-minute bars. Just wait until
2 minute lows in a buy.
Yeah, exactly.
Okay.
Or if it's going down, you just once it breaks, it makes a higher high on the 2-minute bars. You get out of the trade or exit a portion of the trade.
Okay.
And there's also EMAs that you can use. Like I've dabbled in that a little bit. I have some friends who swear by like the 5-minute 9 EMA for intraday trades. And the first time it closes under that, you want to get out of momentum long, stuff like that. So I've dabbled in that a little bit just to practice holding.
Either way, if it's a 5 EMA or a 2-minute candle, whatever we explore here, it seems like they're very tight. It's like, okay, the first kind of retracement, you're going to tap an invalidation of an EMA or a 2-minute candle. Is this the idea? You want to be managing very, like what's the word? Like inclined, like you at the super tight price action, and the moment you get a bit of a break, you want to take a partial. Is this the philosophy?
For the most part, on smaller day trades and scalps and things like that. Again, it just depends on conviction level and how much the overall daily chart is saying to me that there's going to be a huge continued move. But I take a lot of trades, and the vast majority are not with perfect, super extended daily charts where I have conviction in a huge move that might continue into the next day. Most of the time I'm trading a small cap that might be like, okay, I have a feeling that this stock that is kind of scammy is, could potentially push higher today. So I'm going to buy some on this breakout and sell into the push once it starts breaking down the trail. But
what about the idea of the reversal or mean reversion, where you know where the mean is, and that could be several days away, if you're just to forecast how long it should take? How would you then project the trade management when you have a lot of potential in a trade?
You can trail versus the daily bars on that as well.
Okay.
I believe on the August 5th panic with the Japan yen trade back in 2024, I think that worked pretty well. If you bought that and then trailed the daily lows on some of these stocks, it just worked incredibly well. And that was like the reverse, so not overextended to the upside like parabolic, but kind of parabolic to the downside, where you get SPY with a red day, a gap down, another red day, another gap down, and then the reversal. And so that was, kind of the reverse there. But
why is your philosophy to, let's say in a buy scenario, to protect yourself on the lows of current price action, whether it's through an EMA or low of the 2-minute or the daily, but you're using current immediate price action to determine your behavior, as opposed to you enter a buy and you could see there's a resistance level, there's a counter trend line, like you could have all these resistance or reversal factors that you can foresee. Why use current price action to protect yourself to get out, as opposed to past price action reversal points?
I'm gonna be honest, I've never found that to be super helpful, at least in terms of
It's a trade-off.
exiting?
Right? Because like me, more often than not, like okay, I'm typically doing like I'm not scalping in the lowest of low time frames. But let's suppose I got into this trade, right? Like if I wasn't in a long and I took this, my first DP would have been this level of interest, right? And then it would have been this thing. But it's a trade-off, because like what if it doesn't make it there, right? What if it comes all the way up to here? And you're not doing what he's describing, where you're like putting your stop at like prior bar lows or following some like low time frame EMA, etc. Like then you're essentially risking giving all this back for returns on you, right? So a lot of times what I like to do in that situation is like I'll just draw like a fib. And if I start to get candle closes like below these levels, I'll start like shaving out, like shave. And if it does end up bouncing and start going again, then I'll like add back. But I only do that if it doesn't reach the first DP. But like, that's not as efficient though. Like, so for instance, like in the case where he's talking about, where you put your stop at the prior bar lows and you get like stopped out right here, then you caught most of the move, right? You caught all of this, even if it didn't reach the first target. Whereas like the method I'm doing is a bit more inefficient in that regard. Just like preference, right? Because I prefer to give the trade chance to breathe, so if in case it does go further. Whereas other people, they just want to take their money and go. Kind of just move on to the next trade.
I guess, I don't know. I mean, I know lots of people who've used like the short into resistance strategy, where you see a daily chart that's topped out a bunch of times at a level and it pops up into that level and you short at that level. But I just, I don't know.
For the exits.
Yeah, for me, that's just not something that I've found super helpful, because it's a little bit too difficult to determine exactly like
Who am I talking to?
whether it's going to stop it.
It's whoever's listening, right? Whoever's listening. Myself.
Exactly at that level, or go through that level, and then does it still count? To me, that's just not something that's been helpful. I always just kind of get chopped.
Yeah,
when that
it's
happens.
an interesting one because you could also say like,
Is
oh, just
there
simple
another
market structure, I
chat?
buy, and then
No.
when I formed a higher high on
No, there's
1 hour
not.
time frame, then I know, okay, at some points they still reverse. It's a good exit point. But then I see your point here of like, well, what if it keeps going? And then when you do project these potential,
I'm just
reversal
throwing in
points,
my
you can also have
commentary,
10 on the
right?
screen, where it's a resistance trend
Put
line.
my thoughts out into the world. Perhaps it's just going into the void. It's just a bunch of meaningless oxygen wasted. No one's asking questions.
Higher high, EMA, and it's like, oh, which one do I pick? So then some people will manage along, or you're just managing from the beginning, which is an interesting perspective. Do you believe in, I want to use the word liquidity, I don't know if that translates well for you, but just ideas where common stops would be a support level, there's probably stops below a trend line, there's probably stops right above it, session highs or day high, week high, etc. Do you believe that reversals or reactions can happen around these key levels?
100%. Yeah, and it really
Talking
depends on
things
how.
out loud can be a huge benefit. Yeah, like and a lot of times, like some of the people on here have mentioned, like they even do that. Like they won't be live streaming the way I am, but they'll record themselves as if they were live streaming, and they'll just kind of like talk out their thoughts during their trading sessions. Like let's say they're a scalper, they'll start the recording at 9:30 in the morning when the market opens, and then they'll just actively say what they're thinking out loud, so that way they can like review it afterwards and see like, okay, like, well, why did I say this, or why did I not notice this, and so on and so forth. I do find it's definitely beneficial, right? For me to like write the ideas in the Discord when I'm traveling, or to just like kind of do the juice boxes and discuss these higher time frame plans on stream. Because it does help like solidify like the idea, the plans in your head, right? And you know, it's like, okay, like if it's not going to something I planned, then probably shouldn't be doing anything.
Rigged the asset or stock is in general,
Why do you use the word rigged?
because there's like, if you've ever
Like the way I look at it is like there's like three ways of doing it, right? Like you're thinking it in your head, at which pace like your thoughts are running super fast, right? Because you don't have to say it out loud, so you can get a lot of like conflicting thoughts going at once. Whereas when you're speaking it out loud, you're like slowing it down a bit, right? You have to have like your concise idea articulated, and then you go from idea to idea. And then like the slowest level is like writing it, right? At that point, you're like really, really slowing down and giving things a lot of thought as you're writing. So I like having this tablet a lot. Like I haven't been using it too much as of late, but like a lot of times when I'm writing things about like trading, I'll physically write it down on this thing. It's a really good practice, I find.
ever watched a super liquid stock trade, it trades differently than other assets that might have like a very low float, where it's easy for one entity to accumulate the whole float and then manipulate the price action to their benefit, whether that's to run that up so that they can later do an offering or something along those lines. Versus if you have a stock that is like a 500 million share float that's doing a ton of volume.
Hold on, we'll rewind this a sec. Yeah, I've never done the talking out loud stuff. I'm just thinking in my head. But apparently there are people who do not have that voice in their head. I mean, everyone does, right? How can you not? Like, what, are they just like a zombie? There's nothing going on inside. But I find it helpful personally. And it also wouldn't be the first person. I'm serious, there are people who don't have that voice in their head. I think that's a real thing. Possibly. Is there some like term for this? Like, I guess we can look it up. Like, well, what would we even ask to answer this question? Are there people who don't have an internal voice in their head? If so, is there a term for this? Oh, interesting. I guess I don't know, I'm looking at it from like my subjective point of view, because it's hard to imagine like. So what's in their head then when they're not speaking? I don't get it. Because like, aren't you always thinking about something? Or maybe we're not like talking about the same thing, perhaps. Some people almost never think in words and instead think mostly in images, abstract feelings, or wordless knowledge. Oh, so they are thinking. They are thinking. They don't think about anything. It's crazy watching an interview with these people. Oh, what would I even look up to find that? Like an interview with no inner voice? Interview with no inner voice? I mean, I'll watch it later. Probably not going to watch it on stream. But that is interesting, actually, I suppose. Definitely surprising, I'll say that. Probably the term for it is anendophasia. Apparently not a very widely accepted clinical diagnosis as of now. Seems like it's in the research stages. Interesting. The more you know. It's just so odd to relate, right? Because like, I mean, for me, I have it, I suppose. So for me to like think about somebody that doesn't have it, it's like so hard because it's like such an abstract concept. Because I've always been this way, and I thought everyone else was as well. Very odd.
It might have like a very low float where it's easy for one entity to accumulate the whole float and then manipulate the price action to their benefit, whether that's to run that up so that they can later do an offering or something along those lines. Versus if you have a stock that is like a 500 million share float that's doing a ton of volume, they trade differently. They trade a lot cleaner. And so when you get the low floats that do a lot of volume, those tend to be more manipulated or rigged, where you'll get these clear support levels that are painted, and it's just like holding this level perfectly, and then it'll swipe through this level, and it's like, oh gosh, all the longs stop out, all the shorts hammer, and then in one candle, you'll get like, you know, a 30% rip back up, and it's just like, that's not normal price action. You know, stocks don't move like that unless somebody is controlling the action behind the scenes because they have an agenda.
Like the way you worded it. What was it the longs get? Something and the shorts get hammered. Swiped and hammered. I like this. I'm going to use that phrase. But what you're describing here is a cornerstone of my strategy. I call it inducement. When you see price flush,
That's
and
pretty
you're inviting
normal. That's
activity,
pretty
taking out
normal.
other participants. It's like, who's doing that? It's got to be someone that is relevant. And thereafter, if you get confirmations, like it should rip in the direction that right after stopping people from buying, it then ends up long. Because then I usually know that's protected low. And then if I see the signatures, I know momentum is on my side, and it's just a really juicy setup for me. Do you use that signature?
Juicy's
I do,
watching,
yeah.
guys. He's
Those
been
are
watching.
typically like more lower conviction trades for me, just because the way I like to trade is with pretty tight risk. Again, you know, trying to get good risk reward and maybe sacrifice my win rate.
Would
And
you
a
not
lot of these
say-
can be very wicky.
Would you not say that the asymmetrical, that really great risk reward is in opportunities like this, because you have a nice invalidation, which is just that flush price action, the low of that, which typically will be not a huge, huge size, and then, well, if you got the momentum after that manipulation, it should rip, in your words. So would you not say that there is a good risk reward potential in these ideas?
You can. It just depends how far they want to go, but it's hard to know that. And also, the liquidity is just very different in small caps versus the kind of stuff you're trading. Because when they really want to flush these, like I could have 5 or 10% slippage on my stop when they just absolutely rug these things. And so it's difficult
I see.
to.
So the risk is not because of the price action model, it's risk by virtue of your trading. small
Interesting.
cap.
I've never traded small
and when something
caps,
has a-
so it's interesting that, I mean, I have like in crypto when I first started trading, but not now. But it's interesting for him to talk about this in the traditional market. The same kind of shit happens in terms of slippage. Makes sense.
A 1 million share float and is doing 2 million volume per 1 minute candle. It's like they can just make some ridiculous moves. So yes, I can be pre-convicted that that's going to have a crazy type of manipulation move. Like AGMH was actually a pretty good example this past week. It had some pretty trappy action that looked like that, and these candles, these dip and rip soap candles, where it clears out under support and then it washes everybody and then they run it after that. And I did buy that, but that's just one of those examples where I'm not putting exponential risk on something like that because I'm not super convicted, because the risk reward is not super great, and I don't even know what the win rate would be on that. It's just kind of more from field trade, just watching the tape.
I've spoken to a variety of guests on the show, and a unanimous common denominator between all of them is the emphasis they put on data, and is powered by extra trades. I found code like liquidity slippage tomorrow. It's interesting because from the forex side that I'm in, these talks of like liquidity slippage and like will I get fulfilled and all these things is never a consideration at any retail level. But now hearing this from you, and I want to reference back to a conversation I had a couple of days ago with a quant trader, and he's he's a genius. He's one of these phenom kind of. He's an author and he's done a lot in his career. And I was exploring this idea with him of, just this what we described, this price action model of a sweep of liquidity. I was like, why don't institutions? First of all, I asked him about it. He's like, yeah, I can totally see that. That makes so much sense. It's like, okay, so why can't that be coded in, or why is that not what institutions are arbitraging? Or this is a huge opportunity. It's like when you add enough size, you have an alpha decay. It's like by exploiting the market inefficiency, you close up the market inefficiency. And he said the reason that these big institutions are not scalping or day trading in the same way that you and I may is because the fees and the mechanics of taking those trades forces them to be a swing trader or a long-term position trader. Hence, they have to be now fundamentally orientated and so forth. But he said in the ideal world, they'd actually love to be doing these kind of plays. It's just liquidity becomes an issue. I was like, oh, that's so interesting. But then now you're saying you're facing the same thing.
And we've talked
at,
about this,
individual
right?
levels.
We've talked about this a
super
lot.
interesting. Have you explored or considered other markets? Because right now in the US specifically, there's been a rise of futures trading. And I think that's by virtue of the Forex side and CFD kind of shut off because a lot of prop firms shut it off, and then the rise of futures prop firms. So there's been a shift in the last few years from newcomers to go towards futures, whereas it seems like you've been happy in your domain. What is your thoughts on this change that's happening?
I think I'm pretty happy where I am overall. I would like to expand my playbook and get into futures at some point, but it's not something that I would be actively trading on a day-to-day basis, I don't think, because I feel like the markets that I stick to is where
It's where your edge is.
it's where my edge is, but also to me it just feels like there's more edge in general. I feel like a lot of futures markets are just more efficient than small caps in general, especially Forex markets. I think those are even more efficient.
True.
How are you using the word efficient? What do you mean by that?
Efficient, like there's less exploitable opportunities, less clear points
Okay.
where a skilled trader could just absolutely crush it, in my opinion. Like, I'm going to keep quoting Lance, but he has this term called the broken slot machine, which is basically like you want to go and find just the opportunity where you can close your eyes and just go like this, and it's going to be printing money, and you want to be there versus at all the other slot machines where they're just going to take your money.
Yes.
And to me, there's like a lot of noise in the markets, and there's not really that much opportunity overall, and you have to be very explicit about where your edge actually is and define that and stick to those areas. And for me, there's just a lot more of that in small caps and in occasionally options in large caps. But
Would you say there's a correlation between more liquid an asset is, the less exploitable opportunities there could be? The broken slot machine is more likely to be in slot.
I would agree with that, yeah, because I think more bigger players are involved in the most liquid assets, and because of that, they have obviously the most resources available at their disposal, and they're able
Information
to
advantage, speed advantage. Yes, I hear it.
they're able to arbitrage all of those
I
inefficiencies.
don't know if I agree with that statement, right? It's like the lower. How do we phrase this? Okay, let's say this is like a large cap, and then we're going down to like low caps. Okay, a large entity can impact this whole pyramid, right? At any level, whether it's like a large or a low cap. But like a medium-sized entity cannot dabble in these. And like the in terms of like the size, the pyramid is inverse, right? There are not that many large entities that can do this. So like by trading in these lower caps, you're allowing a lot more of this pyramid to like manipulate it. Especially these like middle tier ones, right? Where they have like enough to like manipulate the lower levels, but not the top level. So don't know if I agree with that statement. That's okay though.
If I'm to extrapolate this thinking out, it's very easy to end up in, well, let's trade meme coins then. And you can end up in that world where it's very illiquid and it's very community orientated and very there's a lot of opportunity there also. What's your thoughts to that side of it?
I'm just not super familiar with the mechanics of meme coins. I've tried to get into them a few times, but to me, I just can't trade them in the same way because like the slippage, just to buy and sell, there's like, there was like a 7-8% fee when I tried to do the transfer through PooCoin and all that stuff. So to me, like if I want to have tight risk reward and by the time I'm buying and selling, I'm already losing like close to 20% in slippage, like I can't trade like that.
What account size, if you don't mind me asking, did you start to run into issues of, okay, now I've got to think about my positions maybe not fulfilled in the way that I want them to be, or the markets that I trade now have to have considerations. When did that start to happen to you?
It really just depends on the opportunity because I'll trade stocks that have anywhere from a few $100,000 volume per day with small
That's
sizes
pretty
because I
low.
can't stay away.
Well, I was gonna say.
To stocks that are trading multi-billion dollars in dollar volume per day, and obviously on those multi-billion, like I'm not moving the stock at all. in any meaningful way, even if I'm taking multi-million-dollar positions. But I've definitely hit liquidity issues in some of the lower ones with maybe a few $1 million volume on the day, with just maybe a sub-$1 million account a year or two ago. So you definitely run into those issues if you're trading small caps.
I want to say at the age of 28 that you are, you've achieved what most people dream of, and I guess you made an amount of money that your day-to-day life will not change even if you doubled the amount. What keeps you going, or what is your goals with your trading? Because you're still young, you've got a whole career ahead of you if you want.
Yeah, I mean, I would say I'm kind of split between like pursuit of perfection of my craft and also just what I can accomplish with the money. So like I'm definitely a perfectionist, and I love pushing myself to be the best that I can in every facet of my life, and so that is one thing that motivates me for sure. But I think my life would change if I could significantly increase the amount of money that I'm able to pull in from trading, just in terms of the good that I'm able to do in the world with my family. And we've been working on charity projects. We're building schools in Colombia with Tim Sykes that are opening in like a month. So I'm just really excited to be able to do more projects like that, and just to know how much impact $50,000 can have to someone in underprivileged countries is crazy. And so when you get to the point where you're at these uber high levels and you can pull in multi 8 figures in a year, like the amount of good you can do with that is just crazy. So I'm really looking forward to hopefully being able to do a whole lot more of that at some point in my career.
It's interesting to observe if someone's North Star has shifted from what a young traders would be, is like materialism and just want to get rich and ideally quick, to now being like, okay, philanthropy and a greater cause and looking more towards fulfillment, to someone that is younger and chasing the finance side and the materialism side. And I've been there, and I'm sure you've been there in your early days. What kind of advice would you give to them in terms of, especially in the city, Miami, where that's all around, and that can be a very strong pulling force or a magnet? What kind of advice would you give to that young 21-year-old trader?
It's just very empty, I would say. It's not fulfilling. I definitely had a little bit of that stage because I didn't grow up with a ton of money. And so when I first started to, feel like I was making my own money, like I felt like I almost had to project that and like prove to everybody that I'm now worthy. But once you get past that point and start getting to higher levels, it just becomes less of a concern, in my opinion. And it just kind of takes the backseat. And all of that stuff, to me, it gets kind of old. Like when I first moved out of my parents' house, I moved into this high-rise apartment, and the first time I saw the view, I was just like in love with it, and I was like, oh my gosh, this is the best thing ever. But like, you just kind of get used to the materialistic stuff after a while, after like a month or two of living there, I was like, okay, yeah, I mean, it's a cool view, but like, it's just normal. And the same thing happens with everything. It's like the hedonic treadmill. If you get a new car that's like you're super excited about on the first day, after a while, it's just like, okay, this is my car, So that type of thing is just not fulfilling, versus when you can see the impact that you're having on people's lives, whether that's your family members who you're able to help out, or these kids that you go and you see, they literally have nothing and they're super excited because they're gonna have a place to study. Like, it's just, to me, the comparison is, you can't even,
Interesting. The hedonic treadmill is the idea that people return to a stable baseline level of happiness despite major positive or negative life changes, like winning the lottery, getting a promotion. True. Interesting term, never heard that before.
Slight tangent from me. I watched the Dan Bilzerian podcast, and I can't believe I'm even saying that. But he was talking about exactly what you said, this hedonic treadmill. And he was like, man, when you're living in the best villas and you only go to 5-star hotels and you got the most beautiful women and you have the best of every area of your life, and you've been doing that for 5 years, it's like, then that your dopamine sets the bar there. And it's like, nothing then makes you happy at that point. No experience gives you any excitement. A new car does nothing for you. And obviously that's an extreme example, but it's basically what you're inferring to here is that you acclimatize to the new standard that you have. But the funny thing is, I watch people say this all through my youth, and podcasts, people saying this like, oh, but it's, money isn't happiness, for example. It's like, I feel like everyone's got to touch the fire to feel it's hot.
You've got to experience it for yourself. It's hard to take someone's word for it when you see all these flashy things and you're like, I think that would make me happy. But once you actually get in and realize you're still the same person and it doesn't fill the voids that you had inside you, it's like, okay.
I'm curious on this thing that you said of like projecting, because I did that for sure. And I think everybody will. I think every young trader will. And when I wonder why, I think it's because when we are young, we are all they all have a path put in front of us. It's like, go to school, go to university, get a good job, and this is what your life should look like.
The real enjoyment is doing things for other people, right? Seeing other people happy about things. More than anything. Giving people the opportunity to do things they could not have done themselves or never had the opportunity to do. They also appreciate it a lot more.
You probably are a bit of a nonconformist, and you kind of veer off into this lane, a lane where there is no path in front of you. You've got to pave your own. There's huge uncertainty, and there's big losses that can happen. In your case, large losses that can happen along the way. So then you kind of grow a chip on your shoulder, and when you are working hard, sacrificing, not going out with your friends as much as you used to, and you're losing money, that's a weird position to be in. And then when you go through that valley, what you want to do is be like, mom, dad, or friends, look, like, see. And I think it's an interesting experience. Did you have that similar identity going through, like wanting to prove it to the people around you because of what you had to go through?
I think so, a little bit, yeah. I mean, I would say it honestly probably goes even back, like, more to my childhood. Just like not feeling like I had enough, and like once I finally felt like I had enough, like I had to prove it to myself and maybe all the people who I felt doubted me. But yeah, it's just such an interesting thing to look back on.
I finally have a special offer to share with all of you from the US or my futures traders, which is over 20% of the listeners of the compliant saved by being a viewer of the TO trader. Start off with, let's say, ego, which is what we're talking about here, projection and external validation. But then also the market can humiliate you or humble you. And then when we explore identity of a trader and what that's supposed to embody, do we now live a life through what others would say a trader should look like? For example, a trader should have a nice car, so I'm going to go buy a nice car. Mimetic desire. How has identity shifted for you around these topics as you've evolved as a trader?
Identity is so tough for me as a trader because being a trader, it's really hard not to, like, I can't think of the word, like, stick my identity to my P&L performance. And that's something that I've struggled with
I see your point, though.
so much, because if I'm at all-time highs, like, it's really easy to feel great as a person. Like, I'm a trader, I'm at all-time highs, I'm so amazing, whatever. And then when you have the slightest drawdown, you're like, if your whole identity is based off of you being a trader who's crushing it at all-time highs, and you're in a drawdown, suddenly, like, am I still myself? Like, am I still good? Am I still worthy? Or all of these questions. It's hard to separate those two things, and that's something that I'm still working on.
How many years have you been trading? I guess
Full time since like maybe 4.5
Get
years. at this
sponsor
point.
block.
many years in. Do you ever get a sense?
What is that? Open source crowdsourced skipping sponsor segments. I mean, YouTube has like a built-in one. It just like, I think because this video is like brand new, it has not like working yet. Cause I have YouTube Premium, and typically whenever there's a sponsored segment, like I think the way it works is after enough people have watched the video, and the algorithm notices that people keep skipping like the one portion, they put a button here that says like skip ahead, and you can kind of skip through it. But I mean, I don't really mind to watch it either. Like, I mean, they are giving us like a bunch of free content at the end of the day. Might as well at least give them the view. The least we could do. It's for embedded ads.
Sense of imposter syndrome, whereas like, okay, you might have made millions in your career, and when you're at the all-time highs, you feel I'm the man, and then you go through a brutal period, and you're like, was it all luck, or was it, like maybe it's over now? This is where the run ends. Do you ever get that kind of sense?
I get that a ridiculous amount, yeah, an unhealthy amount.
Interesting.
So something I'm trying to work on is being okay with bigger drawdowns, because I went through kind of 3 stages in my trading career. In the very beginning, I had no drawdowns at all. I had like the 158 green day streak where I was a hyper scalper, and I literally just green day, and it was very easy because I was always at all-time highs. But I would see my friends who would crush it on these bigger days where these A+ opportunities came in. They bet more. They were willing to hold for a bigger win, and I never did that. And so I learned from that, and that's when I started to have bigger wins. And I got really aggressive to the point where I finally had some big losses. And that's where I had like my first big drawdown, which was, I believe, like 28% drawdown off of all-time highs, which for me was enormous. And I didn't like how that felt, and so I dug out of that drawdown, which took me over a year. And now I'm back in the stage where like I've kept all of my drawdowns sub, I think like 1.5, definitely sub 2% for the last several years from all-time highs peak. But I think that's kind of holding me back a little bit. And so I want to be better about being able to put more risk on, and not feel like I have to always be at the exact all-time highs peak, because if I'm not, like, it's mentally taxing on me.
Yeah.
Because literally I'll have 2 red days, or 3 red days in a row where, you know, I have a bad win rate. I might have 7 out of 8 trades losing on a couple days in a row, and I'm questioning everything. And logically, I know that doesn't make any sense because I have the track record to support this, and I've gone through this same thing, and I talked to my wife about this. I've gone through the same thing so many times where I'll have red days, I question everything, I'm like, is this time different? And then a week in the future, I'm up at all-time highs again. I'm like, why are you questioning yourself? 2 days later, 2 more red days, I'm like, am I ever going to make it again? So
It's
a very
interesting
weird thing.
because logic, we can talk about the logic of that, and we can both say, oh, yeah, logically it doesn't make sense, but the emotional side, at the time it makes sense, which is interesting. But I think I can link this to the hedonic treadmill kind of dopamine sets where, you know, when you get towards this all-time highs, instead of realizing this is a beautiful experience, this is really great, this is the dopamine I should feel when I go through an experience, it just becomes your new set, your new baseline.
Exactly, yeah.
So when your all-time highs is your new baseline, a healthy mean reversion even on an upwards trajectory, that mean reversion will feel like a down period, which is crazy when you really think about it.
So
in
very
pursuit of
tricky, right?
any,
This thing he's describing, I mean, I can't say bothers me anymore, but like when you first started trading, and then and you're in that period where you're like starting to like see results, but it's not like you're super confident, consistent kind of thing. Yeah, it definitely fucks with your head a bit, right? Because then you start to think to yourself like, oh man, like did I just get lucky or what's going on here, right? Am I just fucking shit? Like, and so like you have to build up the reps to get past that. Like, I don't even know how else to go about it. Cause yeah, even for me, like I was like there'd be times where I'm like, damn, like what the fuck, am I stupid or not? Or not?
thoughts? Or is this because I've asked this question to a bunch of people, and even a guy that
Stay
has a 30-year
humble.
track record says the same thing.
Yeah, but it's like it's tricky, right? It's tricky because like you can do the wrong thing in trading and get like a winning trade, and you can do the right thing and have a losing trade. So like there are times when you do the right thing and lose, and then if it happens like multiple times in a row, or like what you perceive to be the right thing based on your strategy, and then you start to think like, oh shit, like is this not working anymore? Like, blah blah blah. So like until you have like a really big sample size to know like you're just being irrational at that point, like it does like weigh on you, right?
So I'm like, oh, maybe it's a human instinct. I don't think it ever goes away. I don't know.
I don't know. I mean, some of my friends who are successful traders, I've talked to them and they say they just don't question themselves. They just know that their edge is good and that they're going to go through these periods and it is what it is. But yeah, I don't know if they're just built different, and I'm not cut for
I
the
think
same
it's
cloth.
Like
Maybe
that's
it's,
the other thing, right? Like just suppose. Let's say right now I start taking every single trade I take starts being a loser. Right? I just like I take a trade, I lose. Take a trade, I lose. Take a trade, I lose. Like where do you draw the line from like this is just like a bad string of losing trades / bad luck to like this edge no longer works, right? Like where do you draw that line? So there's always that like kind of thought that potentially creeps in. Fortunately, I haven't had that happen, but if in the future, what I do now stops working, or like let's say I'm forced to like no longer trade crypto and I'm trading like equities only, I have to adjust my strategy a bit, and that strategy stops working as I intended. I'm sure that probably have a similar thought process start happening.
Component of risk. Would you say you're a risk averse or a risk taker?
I'm very risk averse. Yeah.
I think it's pertinent to that. I think the guys that are, even when I look around at some of the entrepreneurs that I know in Dubai that are really successful, when I was a kid, I would have thought the guys that are really making these millions, they would be super smart, super disciplined, super everything. And you meet them and like they're just average and sometimes slightly below average in terms of intelligence, but that gives them that delusional optimism or that forever like let's just take action, I'm not going to overthink it because it will work out, and it works in their favor in the end. And maybe the action taker or the risk taker is the one that not only gets the reward but feels better about themselves in the process, whereas someone like myself who's also risk averse, I question each moment, and even the highs I'm like, yeah, but is this going to last and so forth. What about that famous saying of like every millionaire has 7 streams of income, and as I've evolved in my own journey, I've tried to adopt that, and when I have adopted that, I've noted its benefits in my performance in the markets, because I have not even talking about like I have to worry about rent. It's also like the chase in the market.
I don't got 7
money
streams
gets
down.
satiated a little bit from these other things, and therefore helps me be a little bit more neutral in the markets. Do you have other sources of income, and does that support you in the markets in any way?
So I've actually, yeah.
Is that a
have
joke,
slightly
or do you
different
mean?
viewpoint on this, actually.
You're making a joke?
Took kind of the opposite route, where like when I started off, I had other income. I had YouTube income. I started like a Discord channel, and I had a Patreon, and that income definitely helped me be less stressed out about trading.
This is in your e-commerce days?
No, so this was like right after I transitioned from e-commerce into trading. So I had the YouTube channel originally for e-commerce, and then in the end of 2020, I started trading stocks, and I was so excited about it because I made $2,000 in 15 minutes, and I had to share with people. And so I started making videos, and people were like, "You have to open a Discord," and so I was like, "Okay." And so I did that, and that got up to, I think the peak was like maybe $20,000 a month in the peak of February.
What? This guy just basically said he's a grifter? That is like, I missed it. Did I not hear that correctly? This guy started trading, just immediately started making a YouTube channel and paid Discord? What? Never sold for a lot, never realized a loss? Well, like, that is the joke though, right? Like, Yeah, obviously, if you never sell, you never realize a loss, but is that what you meant?
And it just went downhill from there in terms of revenue. But that definitely was like a huge help for me in the beginning of my career because I was trading my Roth IRA at that point and I didn't have to take any money out. Not that I really would be able to except for contributions because it's a retirement account, but I was able to live off of those expenses, off of that income stream and grow my account while I was in the smaller stages. But now that I'm later in my career, I actually am kind of taking the reverse stance of that because I feel like the bigger you get as a trader and the more advanced you become, the more things that you have distracting you, it's actually holding you back. And so I actually made the decision to close down permanently my Discord community and shut down my Patreon at the end of June. And you know, I've been having basically the best performance of my career since then. Obviously, it's been a hot market, and it's somewhat of a coincidence that it overlaps. But I think just if you focus on too many things and spread your attention apart versus just like going all in on trading, it might actually hold you back. And this is something that Alex Hormozi talks about a lot. Like there's
Girl in the red dress.
yeah, exactly. You know, like you get distracted by shiny object syndrome and like I want to do this and I want to do this and do this versus if you just stuck to doing one thing and doing it really well, and for me that's trading for a decade plus, like by the end of that point you can scale that one thing to such a high level that you make exponentially more than you would make from all those other income streams combined. So that's the way that I personally look at it. But I do think it's important to have some money outside of the markets just for peace of mind. So I do have that. I have a few other like outside.
Would you close your
back to
Discord?
what
The entire
was
community
the
got
difference
F?
between millionaires and billionaires is the billionaires better at saying no because they'll all have good opportunity, deal flow, whatever. But
Nah.
is this ability to say no?
He doesn't want to do it, right?
I
Can't
wanna
keep him
wrap up the episode
hostage.
with an open mic towards the audience where they're a new trader and they're in this valley that I was speaking about, the valley of despair, where maybe they're isolating themselves, their parents don't understand what they're doing, the friends are saying come back and hang out, and they're not seeing the results yet. So it's like high sacrifice and no reward. Should I continue? What words of advice would you give to them?
This is actually going to be a funny answer. I actually think trading is not the right answer for most people. I think it takes a special type of person to be able to make it as a trader. You have to be able to, in my opinion, be very disciplined and put up with a large amount of failure for a long period of time. And most people realistically don't have what it takes. So I think the best advice for the average Joe is, you know, really question if it's what you want to do and like if you're willing to lose money for years before you see something that works for you, because all of the people who I know who made it big in trading, like almost all of them lost for several years before they started making money, myself included, and most of my best
I don't
friends.
know.
So-
People always have this like approach of this. It's like one, you can paper trade, and two, you can like trade with really small size. When I first started trading, like, I didn't paper trade a whole lot. Like I back tested a lot in that regard. But when I started trading, I wasn't putting in like a crazy. Like, you could do like $1 trades, literally. You don't have to fucking start trading, putting in like $1,000 a trade, right? Probably not the best idea. So like in reality, if you approach it correctly, you should not be losing that much money, if any.
My biggest loss?
Yeah.
Well, my biggest loss wasn't at the beginning of my career. It happened after I found success. But the biggest loss was like an 850K drawdown in an hour. So,
Gosh. No.
but obviously, a beginner's not going to experience that. But you know, for several years, from 2016 to 2018, I couldn't make money. I lost money. You know, for years.
Yeah, the difference was what you had money to lose when you lost 850, whereas even a $3,000 loss at the beginning is more.
Exactly. Yeah. When I started with a 2K account, a $30 loss hurt because that was what? That was like, I can't do the math. Like 4 hours, 5 hours of lifeguarding for me. So
Yeah, if you're in the time for money realm, then even a $5 loss is like, oh, that's X amount of my time. I think.
Exactly.
Beautiful. Yeah, wonderful episode, David. This was a lot of fun, and I think we explored a lot of cool topics. So thank you for driving down and being here for us today.
of course, bro. Thanks for having me on.
Interesting.
There we go.
Interesting.
Good stuff, man. There we
Thanks.
go.
Interesting video. You don't have to participate in the Discord, but at least your community thrive. Maybe he did. Maybe he warned them. Maybe they made another one. Like we don't know how he went about it. Another video. Yeah, maybe. The thing is, I've seen all of them at this point. There's like that one came out today, so that's why I watched it. But I think most of them we've seen. Alright, I stay nerding out. I stay nerding out. All those videos on all these channels, I've already watched them all. Grind does not stop. I mean, maybe we can find one of these. I guess we can watch one of these ones, right? One of like the Chart Fanatics ones. Actually, yeah, you know what? We will watch one of these. Cause there was one that I saw, but it was at the gym, and I never got the chance to make notes on it, so I'd rather kind of rewatch it and make some notes. And then there's one with like this, what's his name, with the big fucking neck? A trader main. The thing is, it's like an ICT video, so I don't know if we're gonna have enough base knowledge to understand what he's talking about. Well, yeah,
Someone who actually took
we'll do this. But before anything, though, I'm gonna get some food. I need to get something to snack on. So we'll be back in like a few minutes. Go get some more water. See if this thing sounds normal or not. See if the microphone sounds good or not, I suppose. See if this thing sounds normal or not. See if the microphone sounds... Seems normal. Seems normal to me. I don't know. Seems normal to me. Did you end up looking up anything in terms of the volume? Audio, microphone, mixing, OBS. In the audio mixer, adjust sliders for each source so that they don't peak into the red, aiming for your voice into the yellow-orange. Where's this thing? Yellow/orange. Yeah, okay, it is doing that. Maybe a smidge. Could be a smidge higher. I didn't get a chance to look it up. Well, it's fine. I don't need you to like work on my behalf. Actually, the only issue with this is it's hard to what's it called? Maybe it's one of these audio encoders. It's hard for me to verify, right? Because everyone that's listening has like a different sound setup. I also have my own unique sound setup, so like it might be fine for me or someone else is not fine for another person. We'll leave a prompt going as I get food, and we'll ask what ChatGPT thinks. How to ideally set up the microphone for everyone to have this equal sound. Okay, well, we'll leave this thing thinking about that while I get some food, and then we'll watch one of these videos.
Yeah. Marcos trades. Cool moves. Cold math. Gang eat together. Always.
Yeah. Whole gang lit. Bags heavy. Marcos, let's ride. We in the charts with the crew that's back. Stack so tall, yeah, don't collapse. Lights on us while the beat goes slap. Every tray hit, now the bottles get cracked. Gang in the spot, we ain't missing no play. Money keep dancing like it's on replay. Hands up high when we run that game. Profits go wild when they hear our name. Deep in the zone, but we still gon' vibe. Trade flow heat when the club get live. Entries crisp, we don't chase that tie. Just wait for the move, then the gang gon' ride. us with the crew that's facts. Stack so tall, yeah, it don't collapse. Lights on us while the beat goes flat. Every trade hit, now the bottles get cracked. Gang in the spot, we ain't missing no play. We keep dancing like it's on replay. Hands up high when we run that game. Profits go wild when they hear our name. Late nights. Late nights.
We move risky, math in the clip, lifestyle 50-50. Yeah. Charts look calm, but the waves still deadly. High stake plays, every entry feel edgy. Cold eyes stare when the numbers turn heavy. Ice on my neck, but the trigger finger ready. Fade the herd, I don't follow no sheep. Yacht life days, but the grind don't sleep. High leverage shots, they gon' feel that heat. Price at my line, that's $1 million a week. We move risky, math like a drum, let it hit me. Clips both ways if they tempt me. Profits and pressures 50-50, yeah. Risky, lifestyle wild, but it fits me. Long nights turn to the Bentley keys. High stakes, high life, come get with me, yeah. Fake consensus, let the market talk slow. Shorts get squeezed while the Lambo top go. Feast on the charts, every candle I know. From the bottom now it's all high floors, no low. Count chips in the penthouse suite. Glass floor view while the city don't sleep. Ops mad cause my math too deep. Fibonacci lines cut clean through beef. We move risky, math like a drum, let it hit me. Clips both ways if they tempt me. Profits and pressures 50-50, yeah. Risky, lifestyle wild, but it fits me. Long nights turn to the Bentley keys. High stakes, high life, come get with me, yeah. Risky, but the math still clean. Charts in the streets both know what I mean. Santorini glow, gold in the wind. Marcos.
Delta run and gamma jump. That to burn while we sip that rum. In Greece with the Greeks, we thumb through some. Cash flow hitting like the island drums. Vegas shine, the view's insane. White domes under that golden flame. Trade them map and toe champagne. Lucy's calling out my name.
Charts up high like the cliffs we stand. Olive oil drip, I got pips in hand. Making those nights with the beat so grand. Greeks in Greece, we don't need no plan. Let the fade slow like the sunset hue. Delta swing fast, watch the sky turn blue. Profit so sweet like the grapes they grew. Santorini dreams, every tick come true. Yacht life moves, marble steps so clean. Gamma in play while the water's serene. Options stack deep like the mist we've seen. From Athens, gold to the island scene. We toast to the math gods, watch from above. Every strike hit, that's the trade we love. Delta on 5, bigger fits like a glove. Greeks in Greece, yeah, that's what dreams are made of.
Delta run and gamma jump. Theta burn while we sip that rum. In Greece with the Greeks, we thumb through some. Cash flow hitting like the island drums. Vegas shine, the view's insane. White domes under that golden flame. Trade the map and
Marcos. Yeah, the charts out, toes in the sand. Bag getting bigger while the tide come in. Trading on the beach, waves keep crashing. Laptop glow while the profits keep flashing. Sun so bright, shades stay low. Orders get filled while the palm trees blow. Trading on the beach, 10 game strong. Back stack high, can't do no wrong. Salt in the air, life tastes sweet. We get paid while the waves repeat. Let's go. We get paid while the waves repeat. Let's go. Let's go. We get paid while the waves repeat. Let's go. Feet in the sand, got the charts all lined. Golden pocket hit entry on time. Ice in the drink while the candles climb. Mask so clean, feel the trade in my mind. Sunburn glow with the wrist on chill. Every green ball make the vibe more real. No desk job, just an ocean view. Marcos trades back, flip right on cue. Trading on the beach, waves keep crashing. Laptop glow while the profits keep flashing. Sun so bright, shades stay low. Orders get filled while the palm trees blow. Let's go. Trading on the beach, 10 game strong. Bag stack high, can't do no wrong. Salt in the air, life tastes sweet. We get paid while the waves repeat. Let's go. We get paid while the waves repeat. Let's go.
Golden's all under the sun. Every trade feel like a run. Sea breeze right where we win. At the top of that profit is.
Trading on the beach, waves keep crashing. Laptop glow, all the profits keep flashing. Sun so bright, shades stay low. Orders get filled while the palm trees blow.
Here's the thing.
Trading on the beach, 10 game strong.
When I watch other streams, I basically need their activity. My volume level is 20% max. However, your stream is the only one which requires me to crank everything 100%. It's so odd. It's so odd because, like, for instance, like when I play these videos,
$30,000 in 2020 has taken it to well over
okay, and now it's compared to this.
$10 million.
Yeah, this does seem louder. What about compared to a live stream though? Because I do know that there definitely is some kind of post processing they do where the video ends up being louder. Let's find the stream. This guy's playing League. Okay,
I probably could have went more aggro there even.
that's pretty loud. Let's compare it to this. That's pretty loud. Let's compare it to this. Yeah, it is, I suppose, huh? Interesting. Now, I wonder if it has to do with the settings for the desktop audio, perhaps. I don't know why that would be the case, though. Because the desktop audio is quite low. Like, I'll put a screenshot, I suppose. Like, this is not the microphone, but the microphone one is like to the max. Max though. But the desktop audio is lower. So maybe it's something to do with that. Because I don't see anything else aside from like changing the bitrate on the audio to something higher. I don't see what other setting it could be in the settings area. Or maybe a different audio encoder, I suppose, is also an option, although I don't see that there is another option. What did ChatGPT say? What did the good old GPT tell us? Where's this thing? The Windows sound settings. Bitrate won't affect the dB level. Changing encoder won't affect the dB level. Yeah, but the dB level is like, when I speak, it's coming to here. It's between 50. So from what I read online, you want it to be between 15 and 10. And when I'm speaking, that's like where it is in OBS. It's always between 15 and 10. Sometimes it goes to the red if I'm like, say something really loud. Like a certain sound, I guess, like a P. I could raise it. Like the gain on the microphone is like on level 3 out of 7. Although this ChatGPT is telling me to check my Windows settings, which I never did, interestingly enough, right? Like, I suppose you can look at the Windows settings. Sound settings. Okay, we can try this after. I mean, I think the Windows settings for the thing is fine as well. Like the Windows settings seems fine. Like make sure, it says to make sure the input level's around 80 to 100. It's at 85 out of 100. Plus, the other question I have is like, is when I put the music full blast, is it the same issue? Or is it specifically the microphone? Because that would help like isolate it, right? Because it might not be the mic itself. Go to the Discord, look at my screen. How do I? Whoops. I'm looking. What am I looking for? Sometimes when you have the video volume cranked really loud, it will be a good volume. But then your microphone is low. Yeah, I'm watching your screen. Yeah. You want me to do all this? Is what you're saying? Okay. I have a different version of Windows. I need to figure out how to. Oh, I found it. Yeah, they're all pretty high. I don't even have that gain thing. Where does that even? I don't have the same options as you. That's odd. Like that gain slider you had with the like the dB on it, mine doesn't even have that. Just give me something to check. Like you're sending me something, or are you talking about the thing that you already showed me? Yeah, like the. Like I can do this, for example. Is this a number? Okay, so right now it's on 15. I'm about to raise it a lot, the gain on the mic. You tell me how much louder it's getting. Because the thing is, when I raise this, it starts to pick up background noise. Like you'll see. Okay, now it's at 40. How loud is this? This is like the max gain on this thing. Max gain. That's much better. Interesting. But it doesn't sound like ridiculous to you? Because anytime I speak with it that high in OBS, the thing is like just sitting at the red line. Like any sound is just immediately max red. Max red. Or maybe I raise this one and lower the OBS one. Actually, let's try that. Actually. I can hear background noise. Okay, what about test, 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 test? How's this? It seems like it's getting a lot of background noise right now. How does it sound? I guess I can test myself, right? How is this? How is this? Does seem louder. Does seem louder. Let me refresh this. Let me refresh this. Interesting. Interesting. What about for me typing, for example? What about for me typing, for example? Oh, it's much louder. Interesting. Oh, it's much louder. Interesting. 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 Maybe it is that, I suppose. Seems like that might be it. Maybe it is that, I suppose. Seems like that might be it. Let me mute this. So I can raise it more. I can raise the OBS one even more. Like, how is this now? Or let me do it like this, perhaps. And then see how this sounds on it. But like this, perhaps. And then see how this sounds on it. Yeah, that's pretty loud now, yeah? Yeah, that's pretty loud now, yeah? And let me try this noise canceling thing. See if it stops some of this background garbage. And let me try this noise canceling thing. Okay. How is that? How is that? How is that? How is that? What if I put it even higher? The thing is that there's a buzzing in the background. It's pissing me. Like you can't hear. I can hear the humming. The humming in the background is like really annoying. Okay, is it getting it? Oh yeah. No, it's still there. No, it's still there. What about this? I turn the volume from 100 to 60. The background noise is basically gone. I'm gonna leave it as it was for now, but when I'm like when I go to bed or tomorrow during the day, I'll play with this to see if I can get it in a manner such that there's no background noise while being this loud. But the background noise is like really gonna like I'm just like really OCD about that kind of stuff when I'm watching a video. So if I'm watching my own video with it, it's gonna really piss me off. So we'll kind of just leave it this way. Oh, whoops, whoops, whoops. But at least we're on the right path. At least we are on the right path for now. Plus, I'm also very curious to see like how this like now that we've tried all these different things on the stream, I want to see what it's like post-processing kind of thing to see like what it sounds like. We have a couple of different samples to review now. Yeah, wait for YouTube to process. Yeah, exactly. In the meantime, let's eat and watch this video because I'm getting hungry and I can't have my Invisalign off for too long. Where did the tab go? Did I close it? Hour 50 minutes when I go back. Yeah. YouTube chart fanatics.
$1 million. We are with the one and only Real Simple Ariel, aka someone who actually took 30,000.
Also, is Bitcoin gonna start going here or not? Yeah, let's get our notes prepared. I think the settings were changed back to what they were before. Yeah, I did change it back. I don't want to have it with like the buzzing right now. But that was by design. Maybe we can raise it a smidge. I'm gonna eat anyways, so I'm gonna be muted for like a few minutes anyways. We'll leave it like this for now. But we'll play with it afterwards some more, or I'll do it like off stream.
$1,000 in 2020 has taken it.
Look at what happened afterwards.
Welcome everyone back to Chart Fanatics, the go-to channel for the very best trading strategy and concept breakdowns with some of the very best traders in the world. Talking of which, today we are very excited to have a very special guest, someone who actually took $30,000 in 2020 and has taken it to well over $10 million. Absolutely incredible. Today we're going to be going over how to remove FOMO and reduce FOMO and have your daily chart setup. We are with the one and only Real Simple Ariel, aka Ariel. Thank you for being here today.
I appreciate it. Thank you for having me.
My absolute pleasure. I'm really excited for this because, you know, it's in 5 years to take 30K to well over 8 figures. That's absolutely incredible.
Yeah, and really, these last, 23 and 24, if you were a trend follower, a swing trader, the market was especially forgiving, and it really was a trend follower's dream. When I got my start in 2020, it was a scalper day trader's dream, and coincidentally, that is how I got my start. And I kind of kept day trading in 2020, in 2021, And then the market actually got more difficult for me. And it was some tough lessons in 2022. And I started to make the transition to swing trading. And that was a swing trader's nightmare. So, because effectively nothing was going up. And that's the side of the market that I had been learning. So when 2023 finally came around, 2024, not only had I learned some shorting along the way because that's what 2022 provided, but by the time 23 and 24 rolled around, it was really just dialing in on what are the chart setups so you can eliminate FOMO. And oftentimes as a day trader, you would buy something and scalp it for the day, only to realize a week or two later it was 100%, 200% higher. And, that's like one of the things where it was like, all right, I got to learn how to get in these things and stay in these things. And then, how to use some moving averages to my advantage, and then how to figure out, what are the leading groups in the market, because you're a leading group in the market because institutions are buying them. They're showing relative strength when the market's going down. They go down the least, or they go up, or they go sideways. And then when the market goes up, they go up more than their peers, more than other groups in the market. So having that kind of base understanding is what really puts you in the right groups, in the right sectors. And then, that's how you catch outlier moves in your stock. So
absolutely. And that's where we're going to be beginning today, right?
Yeah. We're going to talk about, and I don't know if you want me to get started kind of on the whiteboard, but I kind of want to touch upon the setups that, we will talk about today. And a few of them that we will talk about is something that is just called, and some people know it as like an EP setup. So, or an episodic pivot. So just EP. And really effectively what an EP is a stock that has a large gap up on earnings, right? Typically, and it could be a good piece of news, but typically really good piece of news is a beat on earnings and sales, a surprise beat on earnings and sales, in particular on a chart that was neglected. It doesn't have to be on a chart that was neglected. It could have been a chart that was already in a stage 2 uptrend. And then it gets, another gap up, and, we'll cover here Palantir on the screens in a moment.
Exactly.
But that's effectively what it is. So I use simple moving averages on the daily. And one of the characteristics of what an EP setup will have is if you just have daily bars, and we'll just kind of use a line chart, and this chart was just in a downtrend, right? What'll happen is you'll have a gap on the daily chart. In a line chart, it will just still look like it just kind of went parabolic in a way. But the volume, so if you had like, this volume, and every day it was like very similar volume, right? Let's just say, some days less than others. Let's just say it trades 4 million shares a day. All of a sudden on the large gap up day, it's going to trade 12, 15, 20, 30 million shares a day, right? That's not my Aunt Susie coming in to buy the stock, right? That's an institution. And it could have been on an earnings beat. And so one of the very first setups that I always like to mention is you have an EP as a setup, right? And so then it becomes, how do I get involved in that? Well, for people who are intraday, they should know what's called an opening range break, right? Or as some people call an ORB.
Hey guys, I hope you're enjoying this episode so far. And don't forget, you're ready for that. But let's get into this episode.
Right. And an ORB is just a simple, if you're looking at a 5-minute chart, it'll be like, here's your candlestick, right? You could even have a little wick on it. So this is your close on your 5-minute bar. It opens here, right? It closes here. And your next 5-minute bar, your entry is over that prior high, right? With your stop being at the lows of the day. That's your low of the day. Sometimes in the morning, right, you'll get like, it'll kind of go down first, right? So like you'll get your candlestick where it opens, it washes out a little bit in the morning. And then again, you can have your entry right over that candlestick. But if you just right off the open, get a candlestick that looks something like that, your entry is going to be over prior 5-minute bar with your stop at low of day. The nice part about an opening range break on an earnings gap up, for instance, is one, you already know what your defined risk is. And there are going to be times when you get stopped out at low of day, but then it re-breaks that 5-minute opening range break later in the day. And then this will be another concept that we touch upon. It's, as a swing trader, proper position sizing, right? In a really strong market on an earnings gap up, the best stocks in the world, they go and they don't really retest. They don't come back. They like take off and they almost make it feel like you're chasing. So knowing what the distance from opening range break to low of day is helps you know how to manage risk. And I typically, dependent on a stock's average daily range, I don't really ever buy more than 10 to 15 to 20% on one position. If it's a slower stock, right, 3%, it moves 3% per day, you could size it up a little bit, right, on an opening range break. So you might be risking, it's a $100 stock and you might be risking $1, right? You might literally have 1% risk. You could put 20% of your portfolio there and lose 0.2% if you're wrong. But if it's a faster mover, like a smaller mid cap, and it moves 8% per day, and you've got 8, 9, 10% risk to the low, right? You might only want to have a 10% position, right? Because then you might be risking a whole percentage point on your portfolio. So kind of understanding your entry tactics, which could just be a very simple opening range break. And then you're buying, the next candlestick that goes through that level, right? And so there's your entry effectively with your stop at low of day.
Yeah.
And so this is effectively the first type of setup that I like to trade. Now, one of the characteristics of an EP setup is the very large volume.
Yeah.
Right. So when you get this daily, now this will look like on the daily candlestick. Here's your daily candlestick,
Mhm.
and it might even still have that little upper wick. So this is how it closes on the daily,
Got
for
it.
instance.
Yeah.
And you've got this large volume that came in.
Mhm.
Another setup that we like to talk about is the delayed HVC. So a delayed high volume close.
Got you.
So you've got a high volume close, right? So the massive volume comes in, it's much larger than the prior days.
Mhm.
And sometimes what'll happen is you'll have this, 20% gap up, right? It just have gapped up 20%. And instead of you wanting to be like, I'm not going to chase that, it feels a little too extended on the earnings day,
Yeah.
right? What you can do is you can wait for it to break the close. So you can use this as your closing price, and I just would draw a line on my chart, right? And going all the way back, and you would just be like, okay, here's your line effectively,
Mhm.
right? Or, it could look like that. And here's your close, your HVC. And you're not entering this stock until it breaks the HVC, and you would say good above the high volume close. Because if institutions just came in and it's really good earnings and sales, the idea is they love this stock potentially to build a position in over the next quarter or two or
Yes,
three.
yeah.
And really, when you're on an earnings winner, that's how long they can move for, right? A real earnings winner in a healthy market can actually move for 6 to 8 quarters,
Yeah.
right? So 18 to 24 months. So ideally, even if the next candlestick came in, and Palantir will be another great example for this, sometimes the very next day could put in an inside bar.
Got you.
Right.
Yeah.
And so you're still not involved in the thing. And on day two, if had you kind of chased this thing, and then in the morning it kind of gaps down a little bit and then just ramps back up,
Yeah.
you could have maybe shaken yourself out.
Yeah.
Right. But then the following day, right, it'll give you an entry where it breaks that high volume close.
Mhm.
And again, you've got two options. Either you can use the low, which I don't really love, that might be too far away.
Yeah.
What I would prefer to do is always use the low of the day,
Mhm.
right? And then that always, is where you dictate how much sizing you can take. And again, this will be what your daily looks like.
Mhm.
But then what does your more granular entry look like? What does a 5-minute entry look like? And again, it could just be that 5-minute opening range break, or as simply as you've got that line on your chart where it closed
Yes.
on the high volume day,
Mhm.
and then that being your entry.
Exactly. So, just to kind of recap, what we're seeing is the volume really pick up. You're seeing a move that's pushing us much higher. And then what we're doing is saying, okay, here's the close. We're getting a bit of a rest for the next day,
Yep.
essentially, where then we're expecting more orders to come in.
Yep.
And once we close above, that's where we're then entering.
And not even a close above, just
Once
a
we break
break
above.
through that level, right? So some people might wait for confirmation,
Yeah.
but the problem is when you break through that high volume close,
Might-
it might go too far. Then now all of a sudden you're chasing it again. So I will literally just enter as we're going
Yeah.
through that high volume close
Got you.
and take my entry and set my stop at low of day.
So you go for low of day of that actual day?
Correct.
Okay, got
Of
you.
the day that I choose to buy.
Yeah.
And again, depending on a stock's ADR, right? If it's a slower moving name, maybe 15% of my portfolio. If it's a faster moving name, maybe 10 to 8%. And then the key is here, you have to always keep in mind when you're scanning the market and when you're looking at the markets in general, if this is a tech name,
Yeah.
right? I want to know how the Qs are doing, right? If this is a gold miner, I'm not interested in what the Qs are doing. I'm looking at what gold futures might be doing. I'm looking at what GDXU might be doing, which is like the gold miner ETF, right? So it's like I always want to be aligned with what the sector is doing, because that's how you, like I always say this, people are always looking at a stock and, they're like, oh, wow, this is moving really nicely, but the market's going down, right? The likelihood is if the market continues to go down, it's going to put pressure on your stock. But if you buy a stock when the market's pushing higher, you give your stock the absolute best chance of working
Yeah.
to push away from your average, which then allows you to hold overnight, right? It's like, I don't want to go into any stock that I buy and then the market's just kind of rolling over and the stock closes really close to my average.
Yeah.
Because if it closes close to my average, what's to stop it from just gapping down overnight? And then it's hard to manage my risk.
Yeah.
It's much easier to manage risk when you're bright green on the trade, right?
Yeah.
But if you buy it, on a day in which the market's going higher,
Mhm.
all of a sudden, the worst case scenario for you is maybe it gaps down and stops you out at low of day. But if it finishes up 4, 5%, 3% from your entry, right? More times than not, it could just be a flat trade. And as a swing trader, the most common trades that I take, is a small red, small green,
Yeah.
flat trades. And then, I never take big red because I know exactly where my stop's going to be. Very few cases does the market just like blow past my stop on an overnight gap down.
Yeah.
It can happen. It does happen. If anybody was trading the DeepSeek thing this year, a lot of people got caught in that. But the reality is that, the 3 small red, small green flat trades are the most common, and then the home runs take care of themselves.
Yeah.
Right. And that comes through patience and proper sizing.
True.
If you buy a 10% position,
True.
the stock has to move 50, 100, at more, right, to really move the needle on your
Have
portfolio.
to brush my teeth.
And they do.
Then we'll
So
bang this thing
delayed
out.
high volume close, the reason it's called delayed is because you're not buying the earnings.
What a way to pause, right? He's looking directly into our eyes. Oh my gosh. By the way, did this thing get got? It did. Clean the high perfectly. Interesting. Boom, boom. How's everything else coming along? Welcome back. You too. Yeah. Yeah, I'm like so. Trying to be a perfectionist now when it comes to. I mean, I always stick to care of my teeth in terms of like brushing and whatnot. But now after every single meal, floss and brush. And it's more so like the Invisalign because you're not supposed to have it taken off aside from when you eat. So I try to eat as quick as possible and then put them right back in immediately. Because the more time I have it in, the less time I have to do it overall. Probably set some alerts, yeah? Where should we put them? And that's fine up here. Probably move this one up a little bit. Put it there out of curiosity. That should be good.
Stock has to move 50, 100, more, right, to really move the needle on your portfolio, and they do. So this is a delayed high volume close. The reason it's called delayed is because you're not buying the earnings gap up. You're kind of waiting. It's like a delayed setup.
Yeah.
You're waiting for it to, maybe pull back in a little bit and then get back through that high volume close, and then that high volume close is your entry.
Let's take a break for a minute, guys, because I'm going to tell you about our preferred prop firm here at Chart Fanatics, and it is thirds a piece. Now, even if you don't achieve a
Market executing?
Yeah, I'll just take market orders. Yeah, and because if you're trading stocks that are liquid enough, and this is the reality for probably all of your listeners, and even still myself, unless you're trading with $100+ million, you're not gonna. If you're trading a $100 stock, and if let's just say you're trading with a $10 million portfolio, if you're trading a $100 stock, getting $1 million position on isn't that difficult if the stock is trading $500 million a day. Right. That's just the reality. Now, if you're trading like a small cap, yes, you have
Different
to be a little
story.
more conscious of the position size.
Also different in crypto, right? Because crypto, it's like everyone's on their own exchange. Like the liquidity is very fragmented, which is a nice thing with the traditional market, right?
But
It's
a
not the
market order will
case.
do. I mean, I'm not too concerned, like knowing that I only have 10% of my portfolio there, if my order was 5, 6, 7 cents higher.
Yeah.
Right? Like, again, if you have a $100,000 account and you're buying a $100 stock, you can only buy $10,000 worth.
Yeah.
Right? So it's like 10 extra cents on your average isn't going to be the make or break.
Sure.
Right? It's like more so being in alignment with a healthy market, being in alignment with a healthy group. Those things are, when the market is just flying, it seems like everything's going higher.
Yeah,
but how do you have the conviction in what's going to go higher, what has a better chance of working for longer? And to answer those nuanced questions, it's be in the stocks that are in the best groups in the market, right? And there's a lot of groups in the market. There's 177 industry groups. And so if you just said to yourself, I'm only going to trade the things in the top 30, those are the stocks that go down the least when the market's going down and go up the most when the market's going up, hence the reason they're in the top 30.
Yeah.
So that's a high volume close. Another one is, so sometimes you'll get price kind of going sideways, right, in a consolidation range, and you'll have like a flat top. So essentially you can just draw a horizontal line, and so this right here, I like to call it just a simple flat top breakout, where you just have a horizontal line. And part of the reason that I don't like downtrending lines is because they can be too subjective. What I mean by that is when you're looking at candlesticks and not line charts, some people draw them at the top of the wicks. Some people draw them at the close. Some people have like wicks going through the upper part of through their line, and so it's like it becomes too subjective for me. And I prefer horizontal lines, right? So where you could literally say price is good above the horizontal line and bad below the horizontal line. And so for me, this is called a flat base breakout. Now I know a lot of people, they like to wait for the retest. Right. I personally don't like a retest because the strongest charts in the world don't retest. Right? There's momentum there. Institutions are buying them. In fact, if it retests, it's actually not as strong as you think. Right? The best stocks in the world break a flat base, and I took an awesome trade like this on Nvidia when it was breaking 500, which we'll cover.
I mean, it depends what time. We've talked about this before because someone else mentioned something similar. But I think this is like primarily applies to like when they're like day trading, right? When it's like the breakout of every time frame involved in the trade. But when you're on the lower time frames, this is not necessarily true.
And it didn't retest, Right? There's no retesting the best stock in the entire stock market.
Yeah.
Every retail trader, every institution wants in this thing. So a simple flat base breakout, the longer the base, I'm sure traders have heard this, the higher in space. So you've got a flat base breakout.
So are you waiting for a close on this one, or is it again once they're above?
So normally what will happen is if you're looking at it in terms of daily candlesticks, and I use moving averages.
Yeah.
So when I'm using moving averages, sometimes what will happen when price is going sideways, the 10-day will begin to hug price really closely.
Got you.
The 20-day will just be lagging a little bit behind it, trailing. The 50 might have been coming up from a little bit lower, right? And so price will be really tight to that moving average. And normally right in here, you'll get we'll erase some of these. You'll get, like if these are candlesticks, you'll get like a really tight day. Like the candlestick will be it'll be much more narrow than prior days.
Yeah.
And again, I'm always looking, it's not really a breakout unless it's over prior day high.
Yeah.
Right? So I'm always looking at my entry over prior day high.
Right.
If it's a really narrow candle, I'll set my stop at yesterday's lows. If yesterday's candle was a little bit wider than I would like, maybe it's got like a lower wick, then I'll look for, I'll use still a break over prior day high, but my stop will then be the low of the day that I'm buying.
Got you.
And so again, very simply, if this is my entry, we'll use this one or your green one. If that is my entry right there, yep. The very next day, I'm buying a break over prior day high. And if it's coming through this flat base, even better, right? It's like not only am I getting in there maybe even a little bit before that flat base breakout, then as soon as you get that move over the flat base breakout, it's like another ad spot if you wanted it. But
Oh, I
that's where
missed
takeouts
that.
even better, right? It's day 3. We'll use this one or your green one. If that is my entry right there, yep. The very next day, I'm buying a break over prior day high. And if it's coming through this flat base, even better, right? It's like not only am I getting in there maybe even a little bit before that flat base breakout, then as soon as you get that move over the flat base breakout, it's like another ad spot if you wanted it, but that's where you would expect not only you to see it breaking over a horizontal level, everybody else is seeing it break over that horizontal level. And then again, really as a swing trader, the job is if you get, something that looks like that, where you get 3-4 days in a row, these moving averages, this would be your line chart, but your moving averages are starting to come in from the bottom like that, and starting to come in. There's the 20, here's your 50-day, right? I'm looking for 3 to 5 day move, right? I pay myself into that. And again, there are instances.
Hey, so it's kind of basically like the Qualamagi style of trading, right? Essentially, same thing.
Live for longer. But I want to get paid, right? Treat it like a business. So 3 to 5 days, you get paid a little bit into that trade.
Even in regards to how
trail the
ETP is
rest
the
on
exact
an
same
ascending
thing.
moving average. If it's above the 10 and the 20, or in some cases the 50, leave it alone, right? If it's and sometimes I even brought up an example of like Toast. I love the company, and I bought it when it broke through the 50. I got stubborn. I didn't trim, and I then ended up using the 200-day because I was like, I love Toast. I love this company. I'm going to hold it as long as I can. And I ended up giving a huge chunk of my gains back, like 75% of what I was up on it.
Wow.
I gave it back. Now, it was still a green trade, but sometimes, when you look at 23 and 24, you say to yourself, like, man, these things are monsters. If you look at Abercrombie, for instance, and you trailed the 50, you would have been buying, an earnings gap up in the 20s or low 30s, and you're not even stopped out until a 400% move.
Wow.
Until it closed below the 50-day. So I always am a swing trader first, but if the stock has the strength and it's in the right group and it's proving itself through price, I become a position trader, right? But I don't just say, oh, this is going to be a position trade. I'm going to hold it for 4 months. No, the stock has to prove that with price, and then I'm happy to.
So rather than predict, you're reacting to the price action itself.
Yes, and I want to get paid for seeing the initial setup, letting it hit me with that initial momentum burst, trimming some into strength, and then just trailing the rest on an ascending moving average and letting it work.
So like just to visualize, if we're
What a lot of people do when they trade this style is like they base the moving average that they're going to start cutting on based on like how volatile the move is. So if it's getting like extremely volatile, like / going parabolic, then they're like using like the fast moving average to start cutting. But if it's just kind of like doing like a structured climb up, then like use like the 20, 50, etc.
aggressive, we're just trailing along. Is there something along them lines?
Yeah, as long as price doesn't close below my desired moving average, it can come right back and retest the moving average once, twice, 3 times. But every time it retests and it bounces off, then I kind of have like a new little level where I can mentally bring up my mental stop loss. So even if it comes down again and breaks the 10, as long as it holds that prior pullback low, I'm okay holding it. So that would be a flat base breakout. Before, sometimes you get a flat base breakout. You'll have like this sideways consolidation, and every one of these little oscillations, they might be what's called a higher low, right? So every time it comes down, it can't come down quite as far. So people build like this little, right, like a tightening wedge. Well, sometimes what ends up happening is you'll get this sideways consolidation, and as it's building higher lows, let's just say you had a low like down here, right? And let's just call this like $16 or something.
Yeah.
Right? What will happen is sometimes price
Sure.
comes back to that level, undercuts it, rallies, right? And sometimes this is one of my favorite entries.
Wow.
This is called an undercut.
This guy trades literally exactly like the other guy. I'm pretty sure this guy like learned how to trade from the other guy because around the time that this guy started trading was when the other guy had all this stuff on YouTube. Because he's literally doing everything the exact same, like step by to the like exact T, even the TPs and whatnot.
Right? And so very similarly, if this still has kind of like a flat base breakout,
Yeah.
and I actually brought some examples of this, and really in this market, and we're making this video in April, and everybody kind of have seen what's happened in the market.
Yeah.
Some of the very best stocks in the world, like a Netflix that just went and saw a new all-time high.
Yeah.
Well, guess what it did? An undercut and rally. It didn't get crushed with a bunch of other stocks and break that March low.
Yeah.
Right? It actually came right down to that March low. It undercut it and it rallied right back through. What else did that? Palantir. What else did that? Hood. What else did that? CrowdStrike. And it's like, so once you learn the setup, sometimes this becomes your very best entry. And then what becomes an add-on entry is once this thing oscillates some more, right? The breakout of and it allows you to pyramid up into that position.
Yeah.
So you've got an average cost basis at $16, and then all of a sudden you're adding at 20 on the
Yeah.
breakout, right? And every time I buy or I add, I'm still treating that new position, as Lance would say, if that has high expected value, I don't just add just to bring up my cost basis.
Yeah.
I want to make sure that when I add, one, I'm still managing my risk in real time on that new entry.
Yeah.
I'm still keeping my $16 cost basis, but if I'm going to double up the position, right, and now bring my average up to 18, it's not just some random spot at 20 I'm buying. I'm buying because I understand the setup.
Yeah.
I'm buying because the expected value at this spot in a healthy market, in a good group, it's breaking through 20, and so I've got good expected value at buying the $20 flat base breakout. But this is an undercut and rally, and we will touch upon that as well. And then very similarly, I won't draw it up too much because it's got a ton of lines, but if you could think about that undercut and rally visually, right, where price comes back and just kind of re-breaks that low and starts to rally,
Yeah.
sometimes you get something like this, but on a moving average, right? Because the moving averages are starting to move up.
Okay.
Sometimes if you miss the price point, sometimes what will happen is price will then begin to rally back through the moving average, and as long as you have a more granular look, and again, you're aligning yourself within the strongest stocks in the market, the strongest group in the market,
Yeah.
those are the most likely to hit still an ascending moving average and then be able to rally back through. So I absolutely love these kind of setups. They make it very, very easy. And then, so effectively, I might only be trading 6 or 7 different types of setups. And so again, you've also got a moving average, UNR.
Let's take a break for a minute there, guys, because I want to tell you about the best CFD prop firm in the entire industry, Funded Next. Funded Next is a proud sponsor of Chart Fanatics, and they have been leading the CFD prop firm industry for many years, literally a top 3 prop firm. Now, why is that? Let me quickly just run through all the incredible things that they do. First off, they have challenges for every trader. Whatever you're looking for, they have. They have a 1-step challenge, they have 2-step challenges, and now industry-leading instant funding. You get on-demand payouts, you get instant access to funding, you get a no daily loss limit, and for every 10% you may tell you to slip it, something you can also and receive it will.
So out and you got an undercut, a UNR, a moving average undercut and rally, a delayed high volume close, a flat base breakout, an EP, and sometimes off of like an EP, what you'll get is in close a flat.
Yeah, did he say what this thing is?
Oh,
what?
You get on-demand for minutes
through. So effectively, I might only be trading 6 or 7 different types of setups, and so again, you've also got a moving average, UNR.
Let's take a break for a minute there, guys. As a practice, first off, 2-step, 2 fund, double trading plus that on profits enough or position side. If you don't compensation. Now, if that doesn't tell you available next today,
High volume close.
back to the episode.
So you've got an undercut, a UNR, a moving average undercut and rally, a delayed high volume close, a
Whoa.
flat base breakout, an EP, and sometimes off of like an EP, what you'll get is for using a line chart, you'll have like that consolidation period, you'll have that big move up. There's your EP, right? You might have a period where it doesn't really do much. It breaks through that high volume close,
Yeah.
right? And then down the road, it just consolidates again,
Yeah.
nice and tight. And this is called a high, tight.
It's usually in the description. What is? No, I was talking about this guy like
Flag.
I don't know. I didn't get what he meant by this, but I think it's just short form for undercut and rally.
You'll get for using a line chart, you'll have like that consolidation period, you'll have that big move up. There's your EP, right? You might have a period where it doesn't really do much. It breaks through that high volume close,
Yeah.
right? And then down the road, it just consolidates again,
Yeah.
nice and tight. And this is called a high, tight flag, right? And so you get that 3 to 5 week consolidation, right? In a nice, tight chart pattern.
Yeah.
And then again, very simply, a breakthrough the upper half of that range could just be another chart setup. And every trader's heard of a high type flag.
Yeah.
Right. Every trader has heard of a earnings gap up. Some of a flat base breakout.
Yeah.
So some of these are very, very common. But what you can't do is you can't just watch price go up and then just get FOMO like you've missed your entry.
Okay, yeah.
Right. So it's really important that you know your entries and you know your entry tactics. And if you're aligning yourself within a good group and a good market, really the world's your oyster.
Definitely, it's proven, and obviously the results that you've generated yourself. But
Does this guy only
really,
use
really great breakouts here, and I'm
technicals?
excited to
And so far, it seems like it, but he definitely clearly has a very big emphasis on trading. What did he call it? Like the healthy industry group. So like he wants to be like, let's say he's trading, I don't know, Nvidia using one of these patterns. He wants to see like the equivalent ETF for that sector also performing for like additional confluence. So he wants to see like the Qs going up. Or like let's say he was doing like, I don't know, JP Morgan. He's probably gonna want to see like the XLF going up kind of thing.
see them on the charts as well. But just before we do that, the sort of pros and cons of what we've gone over so far as a strategy, and as I always say, cons-wise doesn't mean it's bad. It's more so like something to be aware of, something that could be a hurdle. Something that could be,
Patience probably is really the only con for this kind of stuff. Because this is like pretty common, but it's all high time frame trading. Can't really be scalping doing this stuff.
Or implementing this sort of thing.
Yeah, well, the cons for specifically if you're buying a breakout and you're not in a healthy market, the cons are that you're going to get shaken out a bunch.
Yeah.
Right. Yeah. So the pros of these, the pros of the setups, in my opinion, are one, scalability. I think that's how you spell scalability.
Don't worry about it.
Okay. Yeah. So scalability meaning if you've bought a breakout and it's working, and then you're noticing when you're doing your homework at night that you're coming across a few other really nice setups, in a similar group, right? So if like you're onto tech names and all of a sudden, some cybersecurity names look really good and you bought one and it's working, and then all of a sudden another software name looks really good and you bought it and it's working, right? You're now starting to get all of your money to work for you in a good environment, in a good market, and in potentially a good group. So scalability is absolutely one of the pros.
Oh, I thought he meant like adding size to like the winner. Because like what he's saying, like okay, sure, it's true, but also risky, right? Because like let's say you had one and it was running, and then you had like another one. Let's use Nvidia as an example. You got in on the Nvidia break, and that thing starts running, and then AMD starts going. And then I don't know, the ARM starts going, and you're doing these like day after day. It's like days apart where these breaks are happening. Well, at that point, Nvidia's been running for like a week, right? And if that starts to pull back, then the other ones might all be subject to pull back at the same time. So now you have like exposure to like 3 longs that might all turn into losers if it's like a serious pullback or like a fake rally. So not sure if I necessarily agree with doing it that way, but some people, what do they say? Like make hay when the sun's shining or something. So I guess you're just going all out whenever the market's looking strong. Just fair enough. Just to be mindful of that risk.
Swing trading, but two of like, knowing your setups, right? It allows you to get all of your money to work. Yep. Yeah.
Patience. Obviously, we're going swing trading, but also, as you mentioned, from the offset in terms of FOMO, again, you got to be patient to allow your setups to complete. If the price is already moving, you just got to wait for the next setup to form, right?
Yeah, and if you're onto like I said, if you're onto an earnings winner in a good market, they move for 6 to 8 quarters, right? That's just what they do. You can go back and look at Nvidia, go back and look at Palantir, go back and look at Abercrombie, go back and look at VSD, Celsius, Sedge when it made its move, EMPH when it made its move. This is how stocks move, right? They move for 6 to 8 quarters. ACLS. I mean, there's countless of set. AVGO. Like I can ramble off 100 names in my head that this is what they do. So you can't ever feel too much FOMO. Like I initially bought Nvidia as it was coming back through its 200-day. Over 2 years ago at 167
Make hay while the sun
and
shines.
The setup that I had the most conviction on was when I was buying a $500 breakout. So the stock was 300% higher, right? I mean, it had literally gone from and I bought 167. I had add-ons, you know, or it was like 163. I had add-ons on a higher low setup, which is another setup that, you know, we could easily cover. And the setup that I thought was best was.
You know what's interesting about this channel I've noticed so far is that a lot of these people are like relatively newer to trading, and a lot of them made a lot of money in that period of time. Like on this NVIDIA to rally, right? This kind of like this microphone's in the way, but yeah, like from year to year kind of thing, and like this run up. I'm curious to see a few years from now if when we get a bear market, how many of these people like survive. Because this guy didn't talk about any short strategies, right? At least not yet.
Months after a 300% move, because you're like, it's done nothing wrong. This is what the best companies in the world do. Exactly. They go up, they go sideways and consolidate, and then they go up again. Right? They break out of that long-term base. And again, when you think about NVIDIA, was it just NVIDIA, or did a few days later SMCI take off right behind it? And if you looked at SMCI, it was identical looking chart. So yeah, obviously for me, one of the pros is scalability. Another one of the cons is, you know, maybe a ton of little paper cuts, right? Like maybe not being periods where you see no progress, right? And for people as scalpers, you know, for some people, even day traders, is like you might not see progress.
Literally, farmers must cut and dry hay on sunny days to prevent it from getting ruined by rain. So they work hard during good weather to prepare for bad times. Meaning act now while circumstances are favorable, don't delay. Yeah, basically. Basically. I mean, it's fair, right? It's fair in like a raging bull market like that where everything's up only. Like mass euphoria. Not the worst time to be entertaining that idea.
And with that said, too, you know, people do have to remember there is another side of the market. You know, these setups do actually take place in a weak market to the downside, to which I also brought some examples that we will cover. So,
fair enough.
So, pros really is scalability, being able to use all your money. And really just you're aligned with big money.
That's what I was gonna say. Yeah, the big names.
You're aligning yourself with the best names that are institutional quality. And sometimes you know they're institutional quality because they've got really good earnings and sales, or they're just outperforming the market. When the market's up, they're up more. When the market's down, they're down the least. When the market is down, they might be flat, right? And all of a sudden, why isn't a stock going down when the market's getting hammered, right? Like a Netflix, for instance. Why isn't it breaking March's lows and going way lower? Well, because big money is not selling, and as soon as the market starts to kind of get its footing, it's the first one to turn right back around. And now it's the first one of all of the big companies in the world to be at brand new all-time highs. Right? And with no surprise, it all starts with an undercut and rally, then a moving average undercut and rally, then like a little flat base breakout, then an all-time high flat base breakout, and that'll be a great chart to cover for everybody.
Yeah, I can't wait. Well, let's go straight to it.
No, I do like that about the strategy. I must say how he does that. There's the sense that like he can potentially have multiple ads on the same winning trade using like the different versions of the setups he outlined.
Touch upon some of these. You know, just as an example, so this is actually where I bought NVIDIA the first time. So kind of treating it like a higher low setup. So this thing had been pulling back, and after really it had bottomed. All right, and so it had made its nice little move up, rejected the 200-day, put in its low, perked up just a little bit, got back through moving averages, and then it goes, even on an hourly chart, it's a move up and a move sideways.
Got you.
So that was really nice, and I ended up buying it as it was taking out the little range, right? And then a few days later, right, you get a pullback, right? And this is effectively a higher low setup, and I rebought more right through there. And so again, hindsight, I would have held the whole thing. You know, I was selling some like right in here, like $230, I believe it was. And then what did it do? It gapped up.
If your trading strategy depends on the market to be bullish, the market turns out to be bullish, you win. It's luck. The traders who had it backwards lost money, so they don't get interviewed. Yeah, I know. I suspect there are definitely a lot of people like that, but he did mention like some short setups. Plus, the other thing about it too was like some of these trades, for example, like the failure of the pattern approaching like is somewhat of a short setup, right? Like if you have this ranging consolidation that he's looking to have like a break and reclaim, but then the break does not reclaim and starts breaking down lower, well, that's like a potential short entry, right? So it's like it works like inversely. Like a failure of a long setup can present a short opportunity. Obviously, it's not always that straightforward. Like you have to collect data on some of these things because maybe it just ends up consolidating a bit more. So you don't want to necessarily just start smashing a short because it didn't reclaim right away. We'll see. We'll see what he talks about in terms of shorts. Ideally, you have a bit of everything, right? That's my suggestion to people. Like you can trade the price going up, you can trade it going down, you can trade the range, you can do swing trading, you can trade the lower time frames if needed, so on and so forth.
Up on earnings.
Because not only that, because the other pro to that, like when you have like a pretty well-rounded approach of trading, is like you don't FOMO into shit trades, right? Because like let's say your bread and butter is trading these high time frame bullish breakouts, and the market's like sitting sideways. Well, and you're not trying to like force some weird high time frame breakout or anything of that nature, right? You can just chill and look for something else. Like, and you're probably quite likely between your entire like set of playbook, like trade setups that you have, you're probably gonna find like an A+ version of one of them in the market, given the current market condition and all the different instruments that exist.
Yeah, you see the volume?
Right, you see the volume come in, and then if you wanted to use the close, right, so your close here is 2366. So you're effectively buying 2366. Now, obviously, look at how choppy it was around that level.
Yeah.
But once it had built a longer base, so effectively a flat base breakout, look at how tight it got back above all moving averages.
Yep.
And then it breaks out, and then effectively you're off to the break.
And you were entering about the once we're breaking the level.
Once we're breaking the level,
Yeah.
right?
Then would stop go below today's high, or in this case,
You
the
can,
previous.
because it was so tight, you could use previous days lows, right? I mean, when you're talking about a stock like this, you know, that's $230. I mean, effectively, you're talking about 3.5% risk from your entry to low. So even if you had a 20% position, even a 50% position, right, you're risking 1.75. Now, again, you wouldn't put 50% of your portfolio on any one stock, but a 10% position effectively becomes a 0.4% risk on your entry. So, and for me, I actually thought, and this is where I bought it, is this thing went sideways for months on end.
Yeah.
Right? And when this thing actually started to reclaim its daily moving averages, this was my first entry in the 48s.
Yeah.
And then the very next day, the $500 breakout. So I pyramided into this thing twice.
Wow.
And my first day's risk was low of day, so absolutely nothing. And look at how tight the moving averages got.
Yeah.
Right? So price begins to surf these moving averages, gets tight because it goes sideways. You know, when you're in a period like this big gap up, you know, look at how separated these moving averages are.
Yeah.
Right? If you're just buying it up here just because you're getting FOMO, chances are it does nothing for you. And you know, maybe it does go a little bit higher, but effectively you were in a period of nasty chop.
The problem is as well, yeah, exactly the chop. Because if you're buying out of FOMO, you're already emotional, and then when that chop's happening, even if it is moving, edging higher, every time it's coming back down,
You're getting way too emotional. You're
Yeah.
second guessing the position
Yeah, you think it's
completely.
going to come, you know, for a deeper pullback. You know, should I get out? Should I get in? And you know, normally what ends up happening, as you can imagine, is just people get out, then it goes up again, they get back in again, and
Exactly. And now you're just paper cutting yourself to death.
Yes.
And by the time the trade actually goes on to work for you, all you're doing is making back gains. You're not making any new money. You're not, you know, if you just drew down 3, 4, 5, 6% on your portfolio, paper cutting yourself to death on Nvidia, by the time it actually goes, right? Yeah, you might still make some money, but you first have to get your money back.
Yeah.
Right. And that's one of the things where it's like you have to eliminate the FOMO.
and more than likely in that scenario, you probably miss the move, you know, that
Yes.
actual trade at the end.
Yep. Yeah, exactly.
And then
Because
you
you're just
see it
exhausted.
again.
Yeah, you're just exhausted. And then you look for the next one that you think, and you get FOMO on that one because you're like, oh, now this one's going.
Yeah.
And by the way, these are emotions that day traders know exactly what I'm talking about. So it's no different from swing trading.
Of course.
The difference might just be that when you're day trading, you size something up to make to take advantage of a smaller percent move.
Yeah.
When you're a swing trader, it's like you're really going for a potential home run.
Yeah.
And again, you don't know that it's going to be a home run. Let the moving averages take you there.
Yeah.
Just make sure that you're, and I repeat it, you have to align yourself with the strongest groups in the market. So I do have some examples of this, and I did go ahead and clip some of you know, my screenshots and my entries on an Nvidia. So we'll kind of go over those in a moment.
Sure.
Let's take a break for a minute there, guys, because I want to tell you about our incredible sponsor, TradeZella. TradeZella. Now let's get back to the episode.
But essentially 1.5 was my first entry, 1.8 was my second entry, and I didn't have trims on this thing until what I thought was a first red day. So like I remember looking at this up here and going, that's kind of a nasty topping tail.
Got you.
Right? And so that's the day that I trimmed some off, and then of course you get this little gap down, but then look at what happened again on earnings. You get a gap right back up, And then I was out completely on this nasty,
Yeah.
you know, bearish reversal day, and I was done. Again, my crystal ball wasn't working. I wish I would have held on for longer, because look at how much further this thing went. Again, I would have had to have held some more pain.
Yeah.
A break below the 50-day on a pickup in volume, you know, maybe this knocks you out, and I'm selling it even lower than where I did.
Exactly.
But then obviously look at what it ends up doing, you know, once again.
And that's just the reality of trading. You know, you will never know exactly
What
gonna
the
happen.
high is going to be.
Yeah.
I wish I did, because then you know, we might be billionaires by now. But yeah, that's just the reality of trading. I don't ever really know how high something can go.
Yeah.
So it's not something that I, you know, try to worry about. And this is a perfect little flat base, what I consider a flat base breakout. One of the setups that we actually didn't cover is what I kind of call these low cheat setups. And what I mean by that is effectively it's not really a clean flat base, but it is working itself across above all moving averages. So, you know, this wick here actually got me interested. And what I can do effectively is you can just draw a horizontal line where you say, does this somewhat resemble a flat base or not? And I remember the prior day I was like, hey, over 29 bucks, I'm interested in this thing. Why? Because moving averages are very tight, right? It had already shown me that it does have some momentum, right? I mean, this thing went from 13 bucks to, you know, in the 20s. So it had already showed me that it has some momentum. And then, you know, these moving averages are a little wide here, but then as we went sideways, everything started to really tighten back up in here. And so, again, I'm wrong often, but I ended up taking my entry at 29, my first trims at 37, right? I was like, okay, nice push, get rewarded, take it off. And then what ended up happening? You get this outsized move all the way to 73. Now, do I wish I had just held my whole position to 73? Of course, who doesn't? But the reality is you don't know. When I got this outsized move, I believe it was on this day here, this wick. I sold some more, and then I had like a remainder of like a quarter of my position, and I sold the rest on this gap down. Do I wish I had sold top tick 72? Yeah, who doesn't? And this is kind of when I really started to dial in more my selling tactics, using the 50-day and the extension from the 50-day as like a selling tactic that I use now, like even more stringently, just to make sure that I am selling. It was part of the reason that I sold some in the 60s.
Interesting.
But yeah, don't I wish I just never sold some in the 37s and sold it all at 72? Yeah, I would have made double. But that's just not the reality, and I'm okay with that. And obviously, look at what happened afterwards.
Came all the way back down.
Yeah, so and lower than what my average is.
Wow.
So, you know, you just don't argue with price.
Exactly.
And you get a gap down like that on what? Increased volume.
Wow, yeah.
So it's just good to never argue with price.
You know, whilst we're here, in terms of the time frame, do you just stick to the daily time frame?
I just stick to daily, but when I'm at home and I'm at my screens and I've got 5 monitors surrounding me, some of the things that I'm obviously looking at is, you know, like I'm looking at futures markets just to see how the general market's acting when I'm going to buy. Because if I'm going to buy a gold name, a gold miner, for instance, I want to know that the gold futures are pushing up on the day, or at the very least not getting crushed on the day I'm looking to buy. So I'm always trying to align my buys within a healthy group that I'm trading. And then finally,
because why I mentioned that was simply, you know, moving averages, you know, very powerful stuff, you know, very simple to try and use, and, you know, concept is easy to understand. The one thing I think that a lot of traders kind of get chopped up on is that they'll have moving averages, have a plan, but then they'll be skimming through time.
By the way, this guy that's getting interviewed, if you follow him on X, what is his name? Yeah, Real Ariel Simple. This guy like streams on X every morning, doing his like pre-game chart review and whatnot. So if you want to follow this guy and watch him, just go for it, right? Kind of just sits there like going over his like watch list in the scanner and seeing like what's in play, what's not for him. Plus, he'll answer questions randomly, so might give him a follow if you're interested.
Moving average is working in one way on a daily,
and then on a 15-minute, right? It might be like pulling back on a 15-minute. You'd be like, oh, it's pulling back, it's dumping. Like, yeah, but on the daily, it's just still going sideways, right? And so I only focus on the daily to get the bigger picture, and then I look at a 5-minute to get my granular entry, right? So I might like an opening range break. I might, you know, use what's called a 620 setup, which is effectively when your 6 period turns back up above the 20 EMA on a 5-minute, and that's just to get a more granular entry. But the reality is my brain is always like, what does the daily look like? What's the, and I will have a daily, and then right next to it, a 5-minute, and that's it.
Exactly. That's what I was going to say, is that you only have those two.
Exactly.
Because like I said, a lot of traders will go in between all of those two. You know, and a lot of the time it's because they have a bias. Let's say they have a long bias, and then but the daily's not really showing that, or the 5 minutes not. So let me find the time frame that shows me that long bias.
They'll find it. Yeah, they'll find it. Or similarly, you know, with traders, they'll align themselves with the people who are saying the thing they want to hear. Right? You know, if a chart's going down and you're bag holding, you're going to find the guy who's telling you how awesome this company is. That's how it is all the time. One of the examples, you know, as a losing trade that I had was I kind of thought CrowdStrike was breaking out of what I thought to be this little flat base right here. And I had took it right on this day. if I'm not mistaken, and I've got my prints. I believe it was this day here, and then the very next day stopped out. So yeah, 415. I had like I want to say like a 386 or something like that. It was coming 388. I have the prints. But took this trade here, thought it was moving higher, didn't close all that fantastic, and then I stopped myself out the very next day, look at it come down, and then totally rip, and then I actually rebought it at 400.
Right.
So, and then as it's really going through the flat base, and there's your one more day, and I will peel some into strength, and then I'll continue to hold, and it could very well be that this one, for instance, ends up playing out a lot like a Netflix, right? Where it's
a
like
good example of like just take a paper cut, wait.
Yes.
Confirmation comes back in.
Yep, exactly. And similarly, with the Netflix, it's like you had this little flat base right here, right? And then you had this all-time high breakout right there, right? And so I remember, but your very first setup is your undercut and rally. So your first setup is right here, right? So, and then here is your undercut and rally. And I actually saved some just good to peek at. So what day would this have been? Right, so Netflix, this would have been on 4/8, right? On 4/7, I posted, to some of the fellas in Discord. On 4/8 for Tuesday's watch list, what are we watching? Netflix 854.24 undercut and rally. So
Amazing.
So it's like, just recognizing the setup, knowing it's a setup that you like to trade, and then, being here to execute. Now, obviously, this day here, I posted about it on, 4/8 or 4/7. The very next day, obviously, slam. But again, I left it on watch as a, was it, what day would this have been? Let me see. Oh, so a higher low setup. Did I mention it one more time as an undercut and rally? What day was this? So 4/8. So it would have been, 4/8. Yeah, it would have been on this day that I was watching it for an undercut and rally. Of course, I didn't take it on the day that it goes 12%. But I effectively left it on watch as a high volume close setup, right? I left it on watch as a 951 higher low setup, which we talk about, and this was on 413. So in here, I'm looking at it as, this thing is building higher lows. So I was just looking for it to break this little neckline. And it's like, if you just understand your setups, right, as it's breaking through the 50, if you just understand your setups, you don't have to FOMO in just because it's up 12% on one, just because the market's up 12% on one day, and you like Netflix, like, I missed it, I got to just chase it, up here, only to, wick yourself out the very next day. So it's a really good concept of know your setups. AVGO was a short that I actually took. You get, a move effectively going nowhere, breaks down, does this very clean bear flag, and instead of a high type flag, right, it's a low type flag. So it's a bear flag instead of a bull flag. And I remember I shorted this thing $188. It's very simple concept. MU was another one. It just kept rejecting the 200 simple moving average. And then on earnings, right, you get a gap down on a pickup in volume. So I actually shorted this thing at $98, and then just using the descending 5-day moving average initially, and then as soon as it started to roll over, use your 10-day moving average.
Let's take a break for a minute there, guys, because I want to tell you about our incredible partnership with PropFirmTrader.com. Majority of you out there are prop firm traders. You're using prop firms to leverage your trading skills to be able to get more capital and to be able to absolutely change your life. So what's important to you? To be able to find the right challenge for you with the best firms and, most of all, the best. Now let's get back to the episode.
A GRR, very simple concept. You tried to push out before earnings, you completely fail the next day, and just a simple break of the moving average. So effectively, the trade NOW is another one that I got some prints for. You get this big gap down on earnings, pick up in volume, you go sideways, right? And the inverse works. This works the exact same thing on the long side. A great example of just a breakdown, bear flag, shorted as it's coming out of the consolidation, trail with your moving average. And I've got some prints on this. I covered this like near the 200. I covered this a little bit lower, and I covered the rest as it gapped up on high volume, back above the 200. So I can't argue with that. I just got to cover the rest of my short. No big deal. We move on with life. And Palantir, this one gave us, exceptional amount of setup. So first thing you get on a Palantir, the chart was fairly neglected. This thing is back in the $7-8 range, right? And you get this gap up on earnings. What do you notice about the volume bar? It's a pickup in volume. So you can use a 5-minute opening range break. Really, if you're looking kind of at this left side, peak, you would basically say, a breakthrough. Well, it's funny, you also get the retest, right? But then you've got the high volume close, and the close on this is $9.55, effectively right there. And then what are you doing? You maybe get stopped out the very next day, a few days later, but then you get a very tight bar, and then on 5/17/23, you get the break through that high volume close, and what you're off to the races. The stock effectively doubles in a very, very short period.
Incredible.
So the high volume close, so not only do you have an earnings gap up, and if you don't want to chase it, you've got a high volume close as an entry. And if you want to wait also for a flat base breakout, you can do something where you look at your left side and you say to yourself, here's a flat base, right? And you're breaking through your flat base. So if you didn't take it even on 517, well, guess what? 518 could also be an entry tactic.
Yep.
And this subtle gap up just continues to show you how much interest there is in this thing overnight. So it's like retail's piling in, institutions are buying it, and even you get this little subtle gap up, and it's still off to the races.
Exactly.
3 to 5 days, trim some into strength, continue to trail your moving averages, let it work. And this one actually, way up here towards the end, gave us a beautiful, another one, delayed high volume close. So it's like, or a delayed reaction. So you get this gap up day on what? A big pickup in volume, right? And you've got your close of 103.83. And this was like, you know, a perfect example of what we covered on the whiteboard. The very next day, what do you get? Like a very tight inside day.
Yeah.
You know, where it's just like just underneath that level. And then what do you get? A ramp right through, a stop at low of day, and a move from 103 to 3 to 5 days. You could be trimming some 115, 118, you know, a nice little 10% move on your money. Trim some into the strength, continue to trail. This was the day that Pentagon news came out. Should have recognized that as fairly negative news. And again, if you're at 125 and now you're closing at 111, it's probably good to sidestep, you know, and just go ahead and take your money off the table. But, you know, what ends up happening, and again, even on the flip side, this is now a name that I re-own at $100. So just a very simple, if you thought about relative strength in the market, you got first your undercut and rally.
Yeah, I was about to say, yeah.
You've got your undercut and rally. So effectively, here's your entry.
Yep.
You've got yourself a little mini bull flag. If you're paying attention, first you get this 50% move from the lows to, you know, your highs. You get a small little bull flag.
Yep.
Right? And then I bought this little gap. Now, I had a little issue buying this gap up because the market's still downtrending. So, like, even when I was talking to some friends of mine, I said, hey, if we're going to take this, you know, let's make sure we're sizing it down a little. But then here is your flat base breakout.
Yep.
So, again, know your dailies. And then, obviously, this is toast. This one breaks my heart. I bought this thing. So, what do you get? You had a move up, right? Then you had a nice, long sideways base. I bought this thing as it reclaimed the 50-day.
Yep.
Right? And I kind of basically had like a market on close order. So I kind of chased this thing at the very top as it got through the 50-day. The very next day, it worked well, and it went on to work very well.
Yeah.
I didn't trim anything. I got greedy. I thought to myself, this is one of my favorite companies. Everywhere I go is using
What is
those.
this
They're a
company?
payment processing company, and they're everywhere, right? You see them, you know, we just got done using it at the
Financial
coffee shop.
services?
So I love them, but I got greedy, and I didn't trim into any of this.
Yep.
And of course, where do I take my stop? When it breaks below the 200 effectively at the lows. That's trading. That's why you don't get greedy. That's why you peel some into strength. It was
a good example of, like, you know, because you felt confident about the company, and it kind of, not emotional, but like there was a bit more of a sentiment there, personally versus the chart, than usual, based on all the other trades you showed us. That's where kind of those mistakes happen, you know?
Absolutely, and it cost me a fortune. So, you know, I didn't appreciate that I did that to myself. But now again, what do we have? We've got a stock that's now on the undercut and rally right through the lows.
Clean.
And now you've got a nice little clean flat base. So I think to myself, if we can get over this little clean neckline and the market's uptrending, we've now held the 200-day. We're back above the 50-day. Moving averages are very tight. We've got earnings coming up here pretty soon, but not for another 2 weeks.
Yeah.
And
Pfizer? What is that? Terminating deposit company. FISV. God damn. Those are massive gap downs. Holy crap. Holy crap. Quite the run up though. Holy shit. I mean, I don't know. First time ever hearing about it, but I mean, obviously something's going on here. Something ain't right.
we just don't know if this thing will gap up and give us a high volume close, and then we're off to the races again on a toast. So it's important. Just know your setups. Don't get FOMO. Position size properly. I tell people all the time, let the market pull you in. If the market is healthy, everybody's making money.
All the
So
credit
let
card
the market pull
companies
you
and
in,
banks use them to handle
and use progressive
transactions.
exposure. If one thing's working, you're allowed to buy yourself another. If that starts to work, you can get more. If that starts to work, and so you're trading your biggest when you're trading your best, and you're trading your smallest when you're trading your worst, or the market's not being held.
But like, they must have competition, right? There's no way that they're the only one. Crypto is a threat. Oh yeah, for all those stable, like oh, sorry, like all the payment processors, yeah, they have to integrate stable coins. It's too expensive. The payment processors and whatnot are too expensive. Like they take, like, even them taking 2% is already enormous compared to like the 0.01% or 0.1% that like stable coins might take. On top of being faster. That whole industry needs to be like revamped, right? That's like, thank God stable coins are coming into the scene now. Like sending wires internationally costs a shit ton and it's slow, amongst many other things.
Area, this is incredible, and you know the beauty of it is the illustrations we did at the beginning. Clear, it's love. You know how I said to you that the illustration purpose is to try and give you that picture perfect, right? And then we show the reality. And to be honest with you, the reality isn't too far off the picture perfect. You know, it's very clear in terms of those setups, and it's amazing to see.
And I ended up, sorry to interrupt,
No.
I ended up, you know, clipping some of these so students can see kind of, this would have been now where I executed and a few of my covers. And then again, yeah, do I wish I covered at 700? I ended up covering, you know, even higher than my initial 2 covers, right? So not my very best execution, but the concept on the short was there. This was HIMS, right? This was buying that little move over 29, trim into 37, trim right there, and then sold the rest right there at 50. So yeah, so it's like, yeah, $20 high, off the highs. I wish I would have done a better job at selling it.
But that's the thing, like every trader's dream is to be able to buy the bottom, sell the exact
Yeah,
top.
that doesn't happen.
Exactly, and I think being able to accept that and say, okay, you know.
Yeah, this was a toast,
close,
and I bought this thing really well, and then, you know, look at where I got rid of it. And this one kind of hurt. I'm happy to share the P&L on this one. It was great. So, you know, quite a bit where, you know, almost
So you're paying
$500,000,
2%
and then, you know, you end up getting rid of it for
insurance.
$150,000.
You have that with stable coins. So it doesn't cost 2%.
Great, it's still a bunch of money.
Yeah.
But the reality is that, you know, you give away so much of your profit.
Yeah.
What other ones did I screenshot for us? NVIDIA, this was my 2 buys coming out of this flat base, right? I pyramid into this position, and this one, you know, I didn't get rid of some until that topping wick, and then I sold the rest on that very ugly, nasty red candle. And this one was actually one of my bigger P&L trades in quite a bit. So pretty awesome. But again, it's just, like I said, it's the most scalable way to trade, right? If you can get to 50 million, 100 million.
Like a 3-month position.
Yeah, exactly. Because I literally was risking $3 from my entry on 3,000 shares when I initially bought
Stable
it. So
coins
it's like,
offer
effectively
insurance. Yeah, they control the network. Like, there's been plenty of times where people get scammed on their stable coins and they just freeze the wallet of whoever took it, and then they mint you the same coins that got stolen. So like someone hacks your company's wallet for like $50 million, they freeze whatever wallet that $50 million went to, and then they just issue $50 million worth of stable coins and put it to your wallet. There are like plenty of cases like that.
nothing. And then it worked right away, day 1, and then it worked right away, day 2, and that's also because semiconductors were strong. It had a 5-month base, right? It had all of the ingredients to be able to go and make a really awesome move. I might have saved a few more. So this was Spotify, right? I bought it, and then the very next day I sold it. But just as an example, when you size properly, right, your losses are
Much smaller.
They're
Yeah.
very fairly manageable. And same thing with this one, CrowdStrike. I bought it what I thought was breaking out over this little flat base,
Yeah.
and then I stopped it the very next day, and what was effectively a very manageable loss.
Yeah.
Right. So it's like in comparison, yes, dollar-wise, you know, you'd still be like, oh wow, you lost a bunch of money, but when you like.
Okay, that's enough of that. It's done anyways. Boom. Where's this thingity thing? It's pretty cool. Yeah, it definitely is, right? It definitely is. Although potentially a bit alarming, right? If, like, essentially, it's not like decentralized, right? There's just some like controlling entity. So, is there a world in the future where that gets abused, perhaps? Like, oh, we don't agree with your political opinion, therefore we're going to freeze your funds. I suppose that is possible. It's the insurance period. I'm not sure if it's like a set like insurance policy per se. I guess we can look it up. Yeah, so it's not like necessarily an insurance policy per se. More so like they have the power to like on a discretionary basis to like resolve transactions in the manner that I said. Or if like authorities like approach them. Some credit cards will provide or will refund you when you have to purchase. Provide arbitration and legal protection. Yeah, but that doesn't have to do with like the Pfizer, does it? Isn't that more with like actual like MasterCard and Visa? Or maybe it's not, I don't know. How long has it been? Oh, damn, we're already past 4 hours. Damn. Damn. Once crypto can develop a system of consumer protection like that, then people will start using for everyday purchases. Yeah, I'm sure they'll do something similar. Like they're in the middle of passing a bunch of framework in the US for this kind of stuff. It's like inevitable, right? It's like whatever people may think of crypto and like Bitcoin and whatever, all the shit coins and whatnot. There's no denying that stable coins is like a far superior implementation of things. And also like just blockchain in general. Like there's a reason that like Larry Fink is like shilling blockchain nonstop, right? Like they're trying to put the entire financial market on blockchain. Like it enables like 24/7 equity trading. Like the settlement of the trades is like much faster and it's much cheaper for them. Also, like enables a way to have like global liquidity like operating on the same payment rails, as opposed to having like fragmented exchanges like doing one thing, and you have to like facilitate the swap from like one exchange to the other, and like all the paperwork and whatnot that goes in between it. Okay, let's look at some of this data before we do a juice box. Video finish. Yeah, there's only like a minute left. He's gonna say like goodbye or something probably. Can't imagine doing anything particularly useful in that. Okay. And not a particularly interesting one, right? This one's not a particularly interesting one, honestly. Like this long that we talked about the last time we streamed, like was the long. And aside from that, nothing has changed. Like there's a lot of liquidity building here at this poor low, so it's probably the next main area of interest. Whether we like, I mean, I wouldn't know if I'd respect the naked point of control too much. I'd definitely be more looking for this. Other than that, like the same levels to the downside here, so it hasn't changed for a while, right? This level's been here for like what, 2 weeks basically. Nothing has changed in that regard. We'll kind of just leave that written down. Like the liquidity grab plus poor low at like 86.1k. And there's like a big ass like RTH gap on CME, right? Like this gap confluences with this thing as well. So I got definitely a lot of confluence building in that zone, right? Plus like the naked point of control there. On top of like the ETH imbalances too. So that definitely be like the primary zone. Dun, 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 dun. But that would make me a little suspicious because like at that point, one of two things are happening, right? If we cannot like start to come back to these highs and reclaim this stuff, it would be a bit suspicious. We'll say that. Because like this is like pretty weak, right? In terms of a bounce or putting in a low, this isn't looking particularly strong, right? Like here, it was like we swept this thing, started going, and just ripped, right? And that's usually the case with a lot of these lows. But like this is sweep and go. This consolidated a bit and went. Same with this. Whereas like this is looking like much more like bear flaggy, right? This is not like impulsive at all. This is like very corrective price action. And if we like start to go lower without like getting the higher level, then it's just like another like head and shoulders basically, right? Boom, boom. And all I have to say is that like I start to be a little bit suspicious of these longs, especially the lower one. Like this one, okay, yeah, sure, maybe we come sweep the weekend like weekend lows. Where's this pencil? Like sweep the weekend lows, grab the liquidity, clean up the poor low, fill the CME gap, and rip. Probably the ideal scenario if we go lower from here. But like if we're really bullish, we should not be wanting to see this, right? This is like the most you want to be tolerating, and you don't want to be spending time down here. Like this almost certainly has to be like a clean the go low and just fucking rip, right? So yeah. And to the upside, it'd probably just flipping the zone, right? Kind of same thing we talked about yesterday in a sense, or like a lot the last stream. Kind of just like retest this region and go. And just keep in mind like the red boxes that we had drawn on here in the last stream, like the last juice box. Because there's gonna be like an area of interest for shorting, right? Whether it's like here, here, or here. Like where's the high time frame stuff? 945. Yeah. We'll kind of just say flipping 91.5k essentially. Bullish retest of 91.5k. And nothing has changed. The higher time frame plans have not changed above and below. And below being like these lower levels. And then from above being like flipping this red box that we've been talking about. Like getting above this and like doing some kind of retest and go. Yeah. Like maybe there's a world where this zone gets front run. Like if we come down and like tap this and go. But if this happens, like give it time, right? I will not be entertaining this with like limits or anything. To me, it's like if this happens, you're taking the trade because this printed. You're not trying to like front run this move kind of thing. But we'll kind of just mention that. We won't write it down, but we will mention it. Just so you're prepared if it starts happening. Because there's a world where we front run like the orders down here, right? Let's just kind of see how the order book's looking. We haven't checked it. Yeah, because like, I mean, we've been talking about these orders in the order book, right? How there's a bunch of like spot orders down here that got front run. And then it happened again here. And they got front run again. And they've walked it up even more. Now it's at like 85. So now the orders are like here. So it might happen again, right? Might run off on them again. So do keep that in mind. And for shorts, nothing has changed. Nothing has changed. Like we talked about like this level on the last stream and all the levels above it. And like this one got tagged. If you took it, you could have had a nice little juicy scalp trade. But the levels above that haven't changed at all. Have not changed one bit. I say the high time frame plans have not changed above. And for below, did the perp sweep out of curiosity? interesting. I want to see perp swept in case like this wick was a higher on perps, because then like I'd be more inclined to suggest like this kind of trade, like kind of losing the value area high, losing the VWAP, and then like making the move down to get to this zone that we were talking about, like the CME gap fill, etc. But we haven't yet. So like these like levels are looking quite juicy, which makes me a bit hesitant to want to take any kind of short in this region, because we might just like consolidate here, right? And then just blast up, finish the move, and then go lower. Where's the VWAP from yesterday? Whoops. This is a tricky one. Because the other thing we need to keep in mind is that it's FOMC on Wednesday, right? So there's a world where we do nothing for the next few days. We just literally just sit here like this. Maybe we come like top of the low and then come back and just sit here again. So like there might be a world where you like get in on this move expecting some like volatility and it just doesn't do anything. Just kind of, right? So just keep that in mind. We'll leave this. We'll write it. Right. Let me just look at the liquidity on the lowest time frame, just out of curiosity. 901 to 9037. $901. So this is mostly like the low time frame liquidities, right? This box. So probably your best bet is going to be like we lose this stuff, grab this, and do like a bearish retest of this in the VWAP and keep going. Probably your best bet. But that definitely like stop loss break even immediately kind of thing, right? Because we can bounce at any of these levels. We'll just say bearish retest. PD value area high / daily VWAP. Plus, like the golden pockets, like kind of in that region, right? With this little impulse. So once you start losing this zone, essentially, like the typical thing we see with the golden pocket, right? Where like the first bounce comes, and then if it fails to hold, it starts nuking through. Boom, 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 boom. And other than that, the short from the downside still apply, right? The ones we talked about in the last stream. Kind of same scenario, like same levels of interest to the downside, like flipping them on bearish retests. So we'll say higher time frame plans above and below. That's it, right? Other than that, that's kind of like everything's planned and prepared. Nothing has changed. Like all these higher levels, we already talked about plenty of times. So you can just go back and look at other juice boxes. Same with the levels to the downside. Yeah, that should do it. Kind of leave that as is. As always, right, don't trade these blindly, by the way, right? If these things start to form, make sure the data aligns, make sure it's actually edge, take the trade. If there is, amazing. If not, don't take it. And definitely keep these things in mind, right? Whenever we have this like a big event like FOMC or anything like that, like traditional markets are the main focus, right? Because this is going to be kind of driving everything most likely. Can these things start breaking the high? Or no. Also, the other thing, we were looking at the options data earlier. So far, it seems like a sell the news on FOMC is what's being priced in. A lot of people are like hedging for a move down here. So we'll monitor that as the week progresses. But yeah, don't be surprised if this ends up just like doing this kind of shit and going lower. Just saying, just saying. Anyways, you think you'll ever stop trading? It's so fun. Definitely low time frame trading. Yeah, probably. Actually, certainly. Probably almost certainly. It's just like too the time commitment is too much, right? You can't do anything else. And you'll see like all of these interviews that we've been watching. Whenever they're interviewing older people, they all have the exact same story. Every single one. Either they started as swing traders, or they began as scalpers and moved to swing trading. Not a single one has remained scalping. Just like no one wants to sit in front of their computer non-stop for like 6 hours on end scalping. And not only that, but it's not like we're sitting here casually sitting at the computer either, right? It's not like I'm sitting here just scalping, like all chilling, like waiting. Like no, it's like you're sitting here looking at like 10 different data feeds with your brain running at maximum energy capacity, like full attention for that entire time. It's very draining, right? Very draining. Whereas like when you're like swing trading on the medium time frames and whatnot, it's like a lot like the way I look at it is like the lower time frame that you're trading, the more data you need to consume. Whereas like the more large out slower time frames you get to, the less you need to be nerding out like that. And also it does, like, at least for me personally, I don't know if anyone else feels this way. Because like some people stress out about the money in trading, but to me what I stress out about this stuff when I'm like leverage trading is just the need to constantly be plugged in, seeing what's going on. Like I don't know if 15 minutes go by in a day where I'm not looking at this chart. Like every 15, 30 minutes, I'm looking at this thing. I'm at the gym, in the bathroom, making food, watching something on YouTube that's like not trading related. I'm still have the chart open. And like that stress, it's stressful, right? It's like, it's very unhealthy. And it's no coincidence that like there's so many traders that like have like heart attacks in their like early 40s, early deaths, so on and so forth. It's like a very unhealthy job, right? Extremely unhealthy. Probably like I don't even know what can be worse than this. I'd have to like give it a lot of thought. But in terms of like your health, yeah, not the best job to be doing. I almost regret it in some capacity just because of that reason. Like for instance, like my hair was like I'm just naturally predisposed to have like hair loss because my dad's side of the family all like lost their hair very early. But for me, it's like been quite noticeable the rate of like thinning out hair since I started trading. Maybe it's coincidence. I guess you can't say it's definitively related, but the timelines align quite well. Dang, you're looking at the charts too much. But I don't have a choice. That's a thing, right? Because like, suppose I enter some leverage trade like here. Me exiting the trade up here at this failed auction versus exiting here is like giving back a shit ton of money, right? I'm giving back a shit ton. So I can't allow this to happen. Which is like the problem with like scalping, right? Whereas like with swing trading, for instance, like that's why I like these two positions that I'm in right now, the longs and the shorts. I'm perfectly fine to keep them open for the next while. Until we like leave this like price range. I'm perfectly fine leaving them and not touching it. Even if like the long at some point, like was it here I believe? Like so the long was like somewhat underwater at some point. But I don't care. It's hedged. And like knowing this means that I don't have to sit here paying attention, right? Until we get like below this or above this, I don't need to touch these trades at all. So like it's a very, very helpful in that regard. Very helpful. And then that's another like pro of like swing trading on the higher time frames. Like if I got into a short like way up here and prices bounced like 5% against my position, like oh no, it's not the end of the world, right? Yeah. How much money do you need in your account to quit chasing money? I don't trade for money. I don't like money's like it's the reward you get for playing the game. But I just play the game because I like playing the game. Like I played a bunch of video games before, and like sure I played one of them professionally and I got paid for it, but the other ones I didn't, and I just played them because I like playing games. Like I like being in like competitive games. Like maybe if I have some like higher life higher time frame in life goal that requires some monetary amount, like I don't know, I want to open my own venture capitalist fund and I need $200 million, then like I might aspire to make $200 million from trading. But that's not the case right now, so it doesn't really make a difference to me. Same thing for me in my hair. Yeah, pretty unfortunately bad, poor genetics. Plus also like I don't think I was raised with the best. How do I phrase this? Like for instance, I don't think you're supposed to shower often and then like take the towel and like rub your hair, right? For instance, because like it causes hair to like fall out. Whereas like I always did that. Where I think like the ideal situation is to kind of just like blow dry it. But the thing is, like, you don't give these things thought until it's, like, it's happening and it's already too late. So, perhaps it'll be a different story when I have kids. Played professionally, CSGO. I played Call of Duty, but yeah, I did play CSGO. I was really good at CSGO. I was really, really good at CSGO. That CSGO is actually my favorite game, honestly. Out of all of them, that one's definitely... It's the highest skill expression, right? Like, the mechanics, like, there's a high mechanical skill ceiling. Also, you need to have a lot of knowledge of the game. Also, everyone's on an equal playing field, unlike Valorant or other games. Like, everyone has a smoke, everybody has a flashbang, everyone has a grenade, Molotov. I miss playing video games. Yeah, most people do, but honestly, like... How do I phrase this? Like, I did too, a lot. Especially when I stopped playing to, like, go work, like, a regular job. But trading is kind of like a video game, right? And not only that, but, like, now if I ever go back and I do play a video game, I feel guilty. I feel guilty because it's like, I'm just wasting time. Like, it's not that fun. What I do a lot now, more than anything, is I'll just watch people stream sometimes. If I'm like bored and like, maybe I'm like coding something to backtest, or I'm just like looking at charts to look for something, like look for setups or scanning shit. I guess that'll be more relevant now in the future going forwards. But a lot of times when I'm collecting data and whatnot on certain things, I'll just leave. I'll have like a Twitch stream on. Going to bed soon? Yeah, I'm going to bed now. I woke up today. I was so annoyed. My friend wanted to go hiking today. He tells me to be awake at 7:30 on the day of the Lord. 7:30 a.m. on a Sunday? Can you give me a break? That doesn't even come until like 10 o'clock. I was raging. Baby raging. Like, let me sleep in, goddamn. But anyways, all that to say that I woke up super early, 7:30, and then I went on some massive like 2-hour hike. And then I came home, ate, took a nap, and then I went to the gym and had like another intense 2-hour workout. So yeah, I'm pooped. Tired. That guy's serious about hiking. Well, I think it's because because it was him and his girlfriend, and like they have a dog that they wanted to just go walk out in the outside on the hike. So like when you have a dog, like it wakes you up early in the morning, anyways, right? It's hard to sleep in when you have a dog. You're strong. Maybe. The goal is to be strong for next summer. But it's coming along quite nicely. Well, I mean, I guess you're familiar. But I had like a bilateral hernia repair. When was it? I don't even know now. When was that thing? Oh yeah, it was over here. So for a long time, I was like not in the gym grind. Like I stopped going to the gym. I had to like do like the entire rehab process. And then once I did start working out again, it was like very slow to like get strength back and whatnot. But we're finally there. Just recently, like just this week, I hit like a personal record for the deadlift. Even before the surgery. So not only have we recovered our strength, but now we're like even surpassing it. So like definitely like a long setback, but we are getting there. Just have to lose probably like 5 pounds of fat and then gain some muscle by next summer. We'll be in pretty good shape at that point. Cause I'm starting to look pretty big. I've had like multiple people, like whether it's in Toronto or here, that I've seen me recently, who are like, damn, you're looking pretty big, looking pretty jacked. And that's without even like doing any kind of like TRT or anything like that. Imagine I started doing that too. Oh my god. Probably throw somebody through a wall. Bilateral hernia. Oh my god. Yeah, it was quite intense, right? Quite intense. But anyways, we're out of here. So do a quick chat show. Don't call it a night. We have the rest of the week to continue these things going. And I might just here playing with the mic a little bit, to be honest. Kind of test things out after the stream processes and kind of go from there. But kind of scroll back. Who do we got here? Shout to Lyle. Shout to me. Shout to the Nightbot. Shout to Harris Kamal. What else do we got in here? Shout to Gio Gonzo. Shout to Dev. I think that was it, yeah. More or less. Yeah, seems to be it. Call me back tomorrow, usual time. Like 7 p.m. or so when the daily candle closes. Curious to see how this all comes along, but for now we'll kind of give it a rest. Can catch you later. Volume level right now seems pretty good. Really? I put it back to how it was before. This is like the quieter version. That's odd. Interesting. Did I change anything? No, it should be how it was when the stream was started. Interesting. Anyways, I'll watch it back, see how it sounds. Can kind of go from there. If I can, because the other thing is like there's a way to like noise gate some of this stuff. So if I can like boost it how we had it when we were testing, but then like noise gate the humming, in some way. Probably going to be the best bet. Whatever it is, I'll figure it out. I'm going to bed. I'll see you guys later. Later. Later.